is Bloomberg.
Influential conversations from Bloomberg Television. Here's Paul Allen.
Now, despite President Trump's claims that his administration is ready for the coronavirus in the U.S., there is mounting concern that the government is grossly underprepared. So let's take a look at the situation now with Dr. Caitlin Rivers. She's Professor of Epidemiology at the Johns Hopkins Bloomberg School of Public Health. So, Dr. Rivers, thanks for joining us. What is your assessment of U.S. preparedness for this?
I'm pleased that diagnostic capacity in the United States has expanded this week and will continue to expand in the coming days. I do think that will mean that we will identify more cases in the United States, which might feel alarming, but it's really us just catching up to the current situation and getting a better understanding of that epidemiological situation.
Are enough tests available?
Yes, they are coming online. About half of state and local public health testing laboratories now have capacity to test, and I understand the rest of them will be coming online this week. That will bring us to about 10,000 tests a day if things run smoothly.
What's your best guess? How many Americans do you think actually are infected by this virus that we don't know about?
It's impossible to say, and that's why it is so important that we have testing capacity. And that's why I think we will see more cases in the coming days and weeks because there has been transmission likely happening that we haven't observed.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Business is like a puzzle.
Can you make a call given the data?
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
American economic power and future depends on trade deals.
In many of these countries, we're still seeing people struggling.
Finance.
We're in this vortex of uncertainty. These big companies, they just sometimes lack focus.
Investment.
The markets have become a little bit too addicted to the Fed.
Timing the market is just so difficult.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
From New York City for our audience worldwide, good morning. This is Bloomberg Surveillance. Coming up on the program, pricing out Sanders, pricing in a Biden bounce. Fed Chair Jay Powell stuck between a rock and a hard place as 10-year yields drop below 1% for the first time ever. From the Bloomberg Interactive Brokers Studio, hello Wednesday, and yes, really, it is only Wednesday. Equity futures grinding higher, up 2 percentage points and change on the S&P 500. In foreign exchange, a quick snapshot of G10 for you. The euro slightly weaker, down 0.2%, but there it is in the bond market, Tom. 10-year yield, 0.97%, and down another 2 basis points on the day.
Lower a little bit earlier. They've come back a little bit higher yield to 4 digits, 0.9747. The headline across the Bloomberg, John, is like I'm reduxing, I'm channeling August, September, October of 2007 and into the events of 2008. When you see the famous red sticky across the Bloomberg terminal, and it talks about LIBOR. This is 90-day, 3-month LIBOR down. It's not back to 09-08 panic, but nevertheless, that's sort of the originality of where we are. It's a little bit of an 08 redux.
The G7 held a call 24 hours ago, and only the Fed followed up by doing anything. Now, this would and still could be quite potent if others follow up, but I don't see much sign of that right now, Tom. I just see the Fed standing there on its own, cutting rates 50 basis points. Where's everybody else? Where's fiscal? Where's the initiatives elsewhere in Washington? I just don't see it right now.
They're going slow motion, but of course Andrew Bailey will talk to him on Bloomberg, I believe, today as well. But to me, the money question across all of our interviews today is Madame Lagarde in the absolute constraints, the limitations.
I'm sorry, who? Is that the ECB president?
The ECB president.
I haven't heard from her for so long.
Exactly.
What is going on?
She's picking out scarves. I don't know. What I do know is the ECB has major constraints here. She's got to listen to her economists and try to find out a choice set for what you just has to assume to be a recession in Europe.
I worry about the division on the Governing Council right now at the European Central Bank, and I think that's going to slow them down. But when it comes to the tools that they have available to them, I'm actually quite confident. They have lending programs already in place place that they can tweak to target SMEs, which I think is a big deal. They can also be pretty active in the credit market as well. These are tools the Fed doesn't actually have. So whilst the ECB doesn't have the space to act, it has some of the tools that they can use to address some of these very unique issues, Tom.
I think that it's interesting, though, Tom, and to sort of build on that you are seeing funding pressures kind of ease, at least in credit markets, if you look at absolute yields going to the lowest levels ever for investment-grade credit. And you see actually spreads on junk bonds. Actually, they contracted, even on the riskier bonds. They did better. Yeah. They came in even as yields went down, which raises a serious question. I mean, to me, when are companies going to issue, and when is this going to sort of bleed into the system and sort of ease some of the pressures?
Should we talk to somebody who actually manages real money? I mean, that's part of the charm of Bob Michael and others here. There's people that are strategists only, and then there's people that actually enjoy losing money when things go wrong.
We can do that right now.
Dog Log Normal. I mean,
Jim Karen, join us in New York, Morgan Stanley Investment Management Fixed Income Portfolio Manager. Jim, great to see you.
See you.
Let's talk about some of the challenges out there at the moment. Are you happy with some of the tools being deployed?
Not from the Fed, not so far. I mean, cutting interest rates, it's like, bringing a knife to a gunfight, at this point, because it's really about the credit markets. And, what we apply whenever these crisis events happen is what we call a AAA framework. And the AAA framework is affordability of credit, accessibility of credit, and then risk appetite. All three of these have to work together. Affordability, the Fed can lower interest rates. And as you were bringing up earlier, interest rates are actually lower for investment grade credit today. So the borrowing cost is low, and that's good. The accessibility, are the capital markets open? Are they able to issue their debt? That needs to get going again. And then will people actually buy those bonds is the other question.
Jim, how worried should I be about these small and medium-sized enterprises, otherwise viable businesses going through a really, really tough time right now? Can they make it to the middle of the year? Isn't that actually a big question?
So, Jonathan, I'm glad you're talking about that. Not a lot of people are. That is the most important thing that we should talk about at this point. The large corporations and investment grade and all these indices, they can access the capital markets, plenty of liquidity. They have no problems. Small and mid-sized business, this is a lifeblood of the U.S. economy. They employ 65% of the people. This is jobs. Jobs feeds into consumption. Consumption feeds into GDP. What we need to see is more support mechanisms for these businesses to get bridge loans, because these are, as I like to say, these are 10,000 companies that borrow from 10,000 banks that you've never heard of that really are the lifeblood.
But Jim Karen, how do you do the x-axis if we're talking about a medical event? I mean, to be fair, this virus could be good news, clear itself medically from a virological standpoint in weeks, and we move on. I doubt that, but hey, that's one theory. How do you do the x-axis of assistance to small business?
Well, I think you overdo it to make sure that we don't have a big problem, right? So the way that you do these things is you have to start to come up with these lending programs. Like the ECB has a nice toolkit to lend directly to these small and mid-sized enterprises. The way that it works, for the Fed, is they may have to open up certain programs where they tell the big banks, like remember September 2019, we had a big spike in repo rates. That's the big banks not lending to the small banks who then lend to small business. What we need to do is have some regulatory changes to make sure liquidity is flowing so that these small businesses can roll over their loans, and these mid-sized and small banks can also continue to make these bridge loans, and make sure that they're backstopped so that the credit can continue to flow. And if that works over the next couple of months, we get through the virus, then we have a viable business to bounce back. If not, we don't have a viable business.
This is critical. It's called building the bridge to get to the middle of the year. We've got a health shock, a health crisis. It will pass, and it probably will pass by the middle of this year. It all depends on what state these small and medium-sized enterprises are actually in once we get there, and that will define the shape of the recovery.
Absolutely
That will define the upslope. I want to get my hands around the risks we face between now and then if I don't see these tools deployed. Are we talking about bankruptcies in SMEs? Are we talking about airlines going under? I don't want to lay it on thick. This show has been really, really careful over the last couple of weeks just to be very, very delicate about the position we're in. But I think there are questions we need to ask, Jim.
Yeah, so it goes back to risk appetite and willingness to lend, right? So what we see here is that demand is not being destroyed, but it's being delayed. I mean, we came into this event, with relatively strong footing, and I think that most people would see this as a viable opportunity to make these loans to get people to the middle of the year, because it's going to be a good investment. It's going to be a good opportunity. So it's not like this is an event that took place and we don't know what the end looks like. We believe that we do know what the end looks like. It's just a question of the timing of the passing of the virus.
Really important observation, John. And this came after my 6-hour day yesterday. My last interview was with Alan Blinder of Princeton, the former vice chair, and Lisa, Vice Chairman Blinder, was adamant, okay, it's a supply shock, it's a virus, but guess what? It's still a demand discussion, as Mr. Karen mentions.
Well, absolutely, because whether people are going to travel matters with these companies and whether they're going to survive. I'm wondering, there was so much discussion about lending moving away from banks to private equity, to private credit, to smaller firms. And isn't this sort of stress testing them? Aren't they supposed to be swooping in here and actually fulfilling their function?
Yeah, so Lisa, this is a good point here, right? So the regulatory environment has pushed the banks out of that business, and it's gone more to the private side, more to private equity and things like that to create financing. Well, these guys are not the JP Morgans. They're not the Bank of Americas, right? They're not the big banks that have to make these loans or that you can regulate to force them to make these loans. These are private entities. So the liquidity may not be as forthcoming, but in some senses, some of these private equity firms have so much capital that they're willing to deploy that they may do it on an opportunistic basis, but not on a regulatory basis. So in other words, the Fed loses control as the overall regulator of the banks to actually enact this policy. So it's really now up to the animal spirits to actually take this on.
There's also a question of how much time some of these businesses have until they run out of cash or face material debt maturities. Do we have a sense of that? Because in China, there were statistics that a lot of companies, millions even, could run out of cash in 60 to 90 days.
Right. So we don't have good data on the small and mid-sized businesses, right? Because Wall Street typically, looks at large cap companies, and that's typically the way it goes. But what I do know is that more small and mid-sized businesses, a lot of these businesses put, their working capital is their credit card, right? They put things on their credit card, they pay off their bills at the end of the month. So really what we have to start to look for is stresses maybe in some of the asset-backed markets, the credit card markets, the loan markets in those ways. We have to start to be a little bit more creative to see how these small and mid-sized businesses access the credit markets and access liquidity, and that's what we need to be supportive of. So far, what I can tell you is I'm not seeing any stresses in the repo market, which is good, really, really good news. So this is not looking like 2008. This is not a systemic event at this point. All I'm bringing up are the signposts of risk that we should start to look at. So far, so good. But we also have to start to look at some of the credit card data and some of the loan defaults and things like that in the smaller sized banks.
Jim, let's talk about these markets and get a call from you. 98 basis points is the yield on a US 10-year Treasury. Should I get used to these kind of numbers now for the Treasury market? I got used to it pretty quickly over in Germany and Europe and Japan. Do I need to get used to that here in the United States?
I think sadly the answer is yes, especially if the Fed, by most economists now, are calling for another 50 basis point rate cut, relatively soon. So if the Fed funds rate's at, 50 basis points in, a couple of months' time, or in, say, maybe even weeks' time, you're going to be looking at the 10-year note around 1%. Could the yield curve steepen? Yes. Is inflation going to come back in any big way to push longer-term yields higher anytime soon? Probably not. So, and if we're looking at higher yields, we have to look towards the second half of the year. Hard to see what the path of the virus actually takes. Yeah. But the answer is absolutely. These are just numbers, right? 1% is not a magic. It's just a number. 96 basis points, 97 basis points. I agree. It's just a number. It could go lower. But I think there are limitations before it starts to actually hurt the markets.
March 18th. Is the Fed still in play?
Oh, absolutely.
You think another 25?
Well, I can't make a call on whether they go 25 or not. It's going to depend on what's happening in all the other markets, but I don't rule that out.
Jim Karen, great to catch up with you this morning. Morgan Stanley Investment Management Fixed Income Portfolio Manager. The idea, Tom, that the Fed is still in play after a 50 basis point cut.
Absolutely extraordinary.
For a meeting a couple of weeks away.
I love what Mr. Karen said there about forget full faith in credit and look at the credit markets is the point over the next number of weeks. With the news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. It was a big night for Joe Biden. The former vice president won 9 states, including a surprising win in Texas. Senator Bernie Sanders won the large delegate prize of California. The magic number to win the Democratic nomination is 1,991. So far, Biden has 453 delegates. He spoke to supporters in Los Angeles.
Our campaign reflects the diversity of this party and this nation. And that's how it should be. Because we need to bring everybody along. Everybody. We want a nominee who will beat Donald Trump.
Bernie Sanders has 382 delegates. He spoke in Essex Junction, Vermont.
If it comes out to be a campaign in which we have one candidate who is standing up for the working class and the middle class, we're going to win that election. And if we have another candidate who who has received contributions from at least 60 billionaires. We're going to win that election.
Senator Elizabeth Warren is third in the delegate count with 50 and finished a disappointing third in her home state of Massachusetts. Michael Bloomberg is fourth with 44. He did win American Samoa. We should mention that Michael Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts from more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Thank you very much indeed. It's just stunning to look at, Tom.
It's a different terminal.
0.986%. It's here.
The real 30-year yield, the inflation-adjusted 30-year yield, it's like literally 3 times since the time of Paul Volcker we've been here.
We're going to be talking about it all morning on Bloomberg Surveillance. Here's your equity price action. Futures up 70. Do we get a bite and bounce in this market? We'll talk about that a little bit later. Up 2.35% on S&P 500 futures from New York this morning. Good morning to you all. This is Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Set for Life is the game from the National Lottery where you can win 10 grand every month for 30 years. So go smash this month, next month, and make every month amazing. Play Set for Life Mondays and Thursdays.
Set for Life from the National Lottery. Your numbers make amazing happen. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Discover Cork with Aer Lingus when you fly from London from $55.99 each way as part of a return trip. Experience this vibrant city and head to the coast for authentic Irish seafood and stunning scenery. Smart enjoys a short break in Ireland. Smart flies Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
How do you make the most understated Range Rover even more striking? Paint it Santorini black. Fit it with privacy glass. A full leather ebony interior. Then place it on 21-inch gloss black alloy wheels. The Range Rover Velar R Dynamic Black. Understated has rarely been so bold. Limited numbers available for a limited price. Search Range Rover Velar, Land Rover, above and beyond.
Limited availability while stocks last at participating UK Land Rover retailers. Check with your local retailer.
Lines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are on the rise along with European shares as investors take in surprises from the U.S. presidential primary and expectations of a global policy response to the coronavirus after the Federal Reserve's emergency rate cut. Treasuries are slipping further after breaking below 1% for the first time. That's Treasury yields after breaking below 1% for the first time in 150 years. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures are up 69 points, Dow futures up 662, and NASDAQ futures up 195. The DAX in Germany is up 1.4%. Right now, the 10-year Treasury is up 230 seconds. The yield now at 0.99%. It's been clawing its way back up. The 2-year yield at 0.67%. NYMEX crude oil is up 1.5%, up 69 cents at $47.87 a barrel. COMEX gold is up 0.1%, up $2.20 at $16.4660 an ounce. The euro 1.1139 against the dollar, British pound 1.2809, and the yen 107.51. General Electric saying the coronavirus outbreak that has disrupted supply chains and hurt business activity worldwide will weigh on its first quarter results. Presenting Chief Executive Officer Larry Culp with a new challenge in his bid to rescue the beleaguered company. We'll be hearing from Larry Culp later today right here on Bloomberg Radio. Stay tuned at noon Eastern Time when Culp is interviewed by our own David Weston. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. John Farrow, Tom Keene, Lisa Bramowitz with us as well. And 5 things you want to know. Thank you, Interactive Brokers, for your support. John, what I want to do is I want to move away from all the fancy stuff we're talking about and actually talk to somebody who's lived in a low-rate environment. That would be you. And what's it like living in a 1% world? No one across sea to shining sea knows this.
Well, if you're a saver, you've got to get used to not getting much return on your savings whatsoever.
So retirees are crushed, financial repression.
Absolutely.
Good morning,
crushed.
Bill Gross.
And the
Good
banks,
morning, Dr. Larian.
The banks, Tom, start to struggle. They start to struggle.
What does small business do in that environment, as Jim Caron was talking about?
Well, the worry that I have for small businesses is disconnected to where the rates are right now. I don't worry about the price of capital. I worry about the access to it, that some of these viable businesses are going to struggle to get access to capital at a really important time. This is a temporary shock. The problem is that if we don't address some of the needs of small and medium-sized enterprises, we need to get them to the middle of the year. Once this shock fades, we need to have them in a position that they can rebuild again.
But in your time in Germany, when you were playing for that team in Munich, when you were in Germany, is it almost a lethargy to a 1% environment?
Well, bear in mind, Germany are big, big savers, Tom. So the pushback in Germany over what we've had with low interest rates over at the ECB has been quite dramatic. And we're living with them now. Look, one final word on this, because it's important. President Draghi said in 2014, when they took rates negative, that rates need to be low now so they can be higher in the future. That made sense at the time. It's 5-6 years later and we've still got them.
You mentioned the ECB. Let's go there now as our second thing to know quickly here. What does Lagarde do?
What does Lagarde do? I actually think they've got the tools to respond to some of this. I don't think they've got the rates move. They're clearly constrained there. They're clearly constrained by the debate on the Governing Council too. They're divided, but they have the tools. They have the money lending programs they can use. They have the targeted lending program they can use. They can use the credit buying program to make sure financial conditions are loosening credit too. They can buy there in the primary market. They can do important things.
I did a chart, Lisa, today off of what John did, where 10-year yield Germany comes in, but U.S. 10-year yield has come in way more. That gap is narrowing, and John Norman of J.P. Morgan was adamant it was Japanification. I mean, is that what we're seeing?
Well, and it's not just in the U.S. UK government bond yields hitting all-time lows, rate cut expectations over in Japan and Korea increasing. My question is today, what is the lower bound for the United States? Right? I'm looking right now at Fed funds futures pricing in 3 additional rate cuts by year end. Still, which means a full 1.25 percentage point cut with an implied rate of less than 0.4% by the beginning of next year. And it raises a question, what's the new lower bound? Is it negative? Is it 0? And I think that this is going to be an increasing question as people take a look at Europe and Japan and the effects of the negative yields.
We've been testing the effective lower bound in Europe now for a number of years. At the Federal Reserve, they've shown zero appetite to take rates below 0 over the last few years. Zero appetite whatsoever. I haven't heard that.
The Bank of
I haven't
England?
seen it. The Bank of England, I don't think there's appetite there to do it either. They've still got 75.
What if the
they've
market
still
tells
got
them to go below
75
zero?
basis points to play with. I think they'd rather look at a QE program, an asset purchase program, before they go there.
But Tom, this raises a really good question. If the market's telling them to go there, maybe it's not the right remedy, right? And this is what we've been talking about. And John, you've been talking about this a lot. My question is, when are we going to get a fiscal response? And there was a story about President Trump and a question about whether he was actually considering some of these emergency lending programs or perhaps assistance to people who are unemployed. It doesn't appear that he is. He is relying on rate cuts, which raises a question: at what point will monetary policy stop sort of stepping in? At what point will people say this isn't the right remedy? That, to me, is this key question.
I'm looking here at the equity market where bonds, and, of course, the history here of a 0.9972 10-year yield, a little bit higher yields in the last hour. I thought Gina Martin-Adams was great yesterday in the turmoil of it all. You know, we're like correction. It's like a normal pullback from 29,000 down to 26,583 on the Dow futures, up 73 right now. And I said this to Jim Caron: is dividend growth the new yield?
I think for the equity market, Tom, we're in a really, really delicate moment. We're working through the process of questioning the Fed put. We're questioning the Fed put. We're working through this process. I don't think we're working towards the end of the process yet. I think we're in the middle of it. But the Fed cut rates 50 basis points yesterday. Yes, we rallied into it. But to see that headline, the Fed cuts 50 basis points and the equity market sells off, that's not a headline that the Fed is used to.
We got to do a double barrel here. This is so important. Like in the shock last night, John and I are numb from all that we did yesterday. Thank you, Scarlet Fu, for getting me through the early afternoon hours yesterday. There it was. Chelsea turns it on, and they beat Liverpool.
Did you watch that game?
No, I did not watch that game. I was taking the surveillance exhaustion nap.
That was one of the cup games, I think, wasn't it?
Yeah.
Yeah, I missed that one.
You missed it too?
Yeah.
How does Liverpool lose? They're like, they don't
Well, they lost on the weekend too. They lost on the weekend too.
Mental?
Psychology matters, doesn't it?
Psychology
Once
matters.
you show someone they can lose, they start to believe it.
Lisa, what was the biggest news yesterday? It wasn't the emergency Fed rate cut. It wasn't Super Tuesday. I mispronounced the heritage of my family. One of
Shropshire?
How do you Shropshire?
You're going to ask me?
Shropshire.
That was definitely the headline. Not the Democratic.
Well, Kit Jukes, the sock gem, was very upset with you, wasn't he?
I went to my language coach, Kieran from New Zealand, and he butchers it just as bad as I do. Did you know it's Magdalen at Oxford?
Well, Kieran is from Singapore, and Kieran probably speaks better English than I do.
You do.
Can we just touch on what happened with the Democratic nominations? Because this, I think, was really a big turnaround for equity futures last night when we saw Biden taking the lead with respect to South Carolina. Maybe. Yeah. You know, you can make it of it what you will. Perhaps it was temporary. But this does raise a question, coronavirus meet election pressure. Right? Coronavirus meet what we're going to experience as we head toward November.
Kevin Cirilli's been great on this, and the basic idea is they move on to 6 days from now in 6 new states, and the real question is, was it over last night? I get different opinions. Howard Dean was with us an hour ago, and he was just lights out. We'll try to get Dr. Dean on. He was aggressive.
I think he's on very shortly.
Shocked.
He's on very shortly.
I didn't know this.
I think so.
My people didn't tell me this.
Well, my people are telling you now.
Okay.
I think he comes up shortly. Equity futures up 72 with positive 2.39% from New York this morning. Good morning.
Maybe Dr. Dean will prescribe 2 aspirin.
This is Bloomberg Radio.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is a Bloomberg Money Minute. The futures point to a bounce higher at the open after yesterday saw the Dow tumbling almost 800 points and losing most of what we gained on Monday. The Federal Reserve made an emergency interest rate cut, but investors are unsure about whether that's enough to blunt the potential economic impact of the coronavirus outbreak. Chair Jay Powell said that while the U.S. economy remains strong, the outbreak will weigh on activity for some time. More companies are restricting travel amid the outbreak. Ford is banning employees from any air travel for most of this month after 2 employees in China contracted the virus. The nation's ports are taking a hit. A trade group says that first quarter cargo volume at U.S. seaports will be down as much as 20% from the prior year period. And in other news today, PricewaterhouseCoopers has agreed to stop asking job seekers their age as part of an $11.6 million deal to end a discrimination lawsuit. It was filed by middle-aged accountants who'd accused the company of favoring recent college graduates. Gina Cervetti, Bloomberg Radio.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. Interconnect here.
Let's start with the national security implications of this.
Balance of Power with David Weston.
What could the United States do to help?
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio, where we have a decent bid 2 hours out from the opening bell in New York. Equity futures up 72, positive 2.4%. In the bond market, Treasury set up as follows. Yields unchanged, just north of 1% now on a 10-year. On a 2-year note, south of 70 basis points. Some remarkable price action here, Tom. In foreign exchange, the euro negative 0.4%. The dollar just coming back a little bit.
The yen, 107.57. There's a headline here. We haven't done much on the virus this morning in the news flow. I think everybody's up to speed. What was it, 2 events in New York City yesterday, in greater New York City? A headline across the Bloomberg, and this really shows not the specificity of cancellations, but there are 2 or 3 different pilgrimages in Saudi Arabia, and the Umrah it's considered like a secondary pilgrimage because it's not compulsory, but it's where anybody goes to Mecca, and they've canceled the entire Umrah pilgrimage moment in Saudi Arabia. That's a big deal. It's a broader statement than just canceling one specific thing like the IMF spring meetings.
A series put together, though, Tom. It's a series of gatherings that ultimately have been cancelled.
Yeah.
And this is playing into the economic impact, not just in the Middle East, not just in Asia, but also here in the United States as well.
Little perspective this morning as we bring in our good guest. Howard Dean, of course, is Dr. Dean of Albert Einstein Medical School, the former governor of Vermont. And he and I are of a vintage where we remember the extraordinary events of 1972, which was George McGovern. And I would point out, Dr. Dean, that it was the 26th Amendment where it was guaranteed that the youth of America would show up and vote. They didn't show up yesterday, did they, Dr. Dean?
No, they didn't, and I'm scratching my head and figuring out why. I've been reading Twitter, as I often do, And there's a lot of young people on Twitter expressing disappointment because many of them are for Bernie, but they didn't vote. And I don't understand why. I don't get this. They have a candidate that's very exciting for them. It doesn't happen all the time. Young people elected Barack Obama in 2008. The only time in my lifetime where more people under 35 voted than over 65. So I do not understand what's going on.
I would suggest Vice President Biden doesn't have the former president's electricity of speaking and events and all that. Does Vice President Biden need the youth vote to defeat Donald Trump?
I think he does. Our party really is young, dark, and female. I mean, if you look at the three past elections, 2018, 2017 in Virginia, and 2019 in Virginia, the legislatures were transformed. And the average age, I think, of the Democratic caucus went down about 10 years in a single election in the House. So, but our core group is young, of color, and female. And so we need those groups to turn out. If those groups turn out, we win. If they don't turn out, we lose. It's just as simple as that.
Well, Howard, let's talk about what was actually helping out the former Vice President Joe Biden. It was the African-American vote, overwhelmingly in his favor. Now, 2 months ago, it felt like that would be the story. But 8 days ago, it felt like that maybe some of that was slipping. What has happened in the last 7 days?
It's not entirely clear, but it's more than the African-American vote. The African-American vote started all this in South Carolina, but then throughout the South, he just got enormous numbers. And I can't conclude anything but this is his association with the only African-American president we've ever had in this country. But there's more to it than that. To win in places like Texas and Massachusetts, which is just shocking, and Minnesota, that was not the African-American vote that carried him. It was others. I think some of this is just voters saying, look, we've had enough of the drama and the corruption and the every day. Let's just get somebody we know. And even if it's Joe, who may not be that exciting, when he showed he could win in South Carolina, that apparently struck a match. I've never seen anything like this in 11 cycles here.
Do you expect in the next 24 hours that this race goes down to 2?
No. Elizabeth is probably going to stay in. She thinks it's going to be a brokered convention and she can be the peacemaker. I don't know what Mike Bloomberg's going to do, of course. I think he's considering his options. He has enough money to stay in as long as he wants to. And his goals are really broader than just becoming president. His ads have been absolutely fantastic in terms of ripping up Trump. And, you know, he gets a big discount on those ads as long as he's a candidate. So I have no idea what either one of them are going to do. And so far, as I assume it's going to be a 4-person race into the next big weekend, because I've been asked about this before, and I've said repeatedly, we're not going to know until 2 weeks, and the next week is important too. Michigan and big states like that. So this is not over yet by any stretch of the imagination.
Yeah, and Dr. Dean, Michael Bloomberg has said, he's come out and said that the only way that he could win is in a contested convention where the superdelegates come together and meet. Michael Bloomberg, founder and majority owner of Bloomberg LP. I'm wondering, from your perspective, what is the likelihood that we will get a candidate determined by a brokered convention, which has not been used for decades?
Not since 1952. I think it's very unlikely. Frankly, the optics of that are awful. Whoever the losing candidate would be in a brokered convention, their supporters would have a very hard time getting behind the winner. I just am not for brokered conventions. The superdelegates have never elected a president. It's always been done without this help of the superdelegates. The superdelegates really are only there so elected officials will attend the convention, which they didn't used to do until they were superdelegates.
Howard Dean, what kind of vice president does a 70-something-year-old gentleman from Delaware need? I mean, I know it's way too premature to talk vice presidential
candidates. No, I don't think it's premature. And Bernie's already said this. Bernie has said we cannot have 2 old white guys at the top of the ticket. He's absolutely right. I'm hoping we're going to have a young woman of color on the ticket. I can think of a number of them. The governor of New Mexico is Hispanic. There's a senator from Nevada. Stacey Abrams, of course, is highly well thought of. So there are plenty of well-qualified women. I think it's important that we have a woman And I think it's probably important.
What's your okay? Great, but some people listening to this would say you're going to hand President Trump a second term. I mean, maybe that's President Trump's greatest hope. What is the evidence America will actually elect a woman as president or vice president?
This is not just about winning; it's also about changing the country. And if we have to run in fear of voters who won't vote for a woman, then this country's in deep, deep trouble. All those people are already voting for Trump, and we're not going to get their votes back. I've never thought that the way of winning this election is to take a few Trump votes back. There'll be some. The way of winning this election is to gin up our base like crazy and give young people, people of color, and women a reason to vote. Now, that's what's so disturbing about yesterday. It's really remarkable what Joe Biden did, but it's incredibly disturbing. The young people didn't vote, and it didn't just hurt Bernie Sanders, it hurt everybody.
It's sad we're even having this conversation. I'm used to female leaders in the UK. We've had female prime ministers. We've had leaders
I'm not making an editorial comment.
I know you're
Dr. Dean has got decades of experience.
It's a simple observation. I think it's sad we're having this conversation. Howard, let's talk about drumming up the base. I thought the base was fired up. I thought it has been for the last 3-4 years. Haven't we got to get the guys in the middle?
The guys in the middle are going to probably vote with us, especially with a candidate like Biden, because they're sick of Trump. But I think you win races by firing up your base. That's how Obama won. So I think that's the key. Now, the guys in the middle, they'll make up their own decisions. Look, we can't stand for nothing as a party.
Yeah.
I don't want to be like Jeremy Corbyn, because that was obviously a disaster. But we do have to stand for something.
Dr. Dean, I have to wonder, one big question has been turnout, and how much can we read into the levels of turnout that we've gotten within these early votes?
A lot. I am stunned and thrilled with the turnout among African Americans. I was stunned and thrilled by Bernie's turnout in Nevada among Latinos. So this is clearly a really important part. I'm not worried about turnout among people of color. I am worried about people, young people. And yesterday's result makes me very nervous, and I think we have some work to do.
Howard Dean, we greatly value your time. Thank you so much. He's the former chairman of the DNC. I got 2 housekeeping notes. Christopher Owen is brilliant on trend base. He really talks about a bottoming in process. He knows that gold was a big winner yesterday. Tom McKenzie in Beijing, now the virus is more away from China. McKenzie with a fabulous tweet today with the photo of the ring around this. If you go to Beijing, the ring roads are elevated and packed. Absolutely packed in China. And McKenzie's saying, let me quote it exactly, evening rush hour traffic on Beijing's second ring road now strangely reassuring. Yeah. So there's a real positive statement from the good work of Tom McKenzie in Beijing.
One thing that's been kind of funny is not funny, but ironic, is people looking at pollution output from China as a positive sign that things are up and running, right? Because pollution levels completely plummeted. And then as they pick up, people view that as a good sign. I do wonder, though, how much this is factories getting up and running and giving the appearance of running versus actually up and running. And I think that is going to be what we're going to have to check in the data.
I've got relations in Shanghai, Lisa, and they're saying exactly what you just said. There's one part appearances, and there's also they actually going out and doing it. And I'm getting just personally an optimistic tone from Shanghai that certainly wasn't there a week ago as well. John, we got to go back to these markets, and I mean, just the extraordinary move. We got a 10-year yield over 1%. Crisis over.
Not even a basis point. 1.004%.
Can we leave early today?
Is your yield on a 10-year? I think that you and I can leave a little bit earlier than we did say yesterday.
We had a great team helping us out there, and we had some wonderful, wonderful guests as well. Mr. Minard was fired up with Guggenheim looking
what did
for
he say?
0.25%
10-year
yield as well. John, what do you see else on the screen?
I feel like Scott Minard's been bearish for about 3 years now. I know it hasn't been that long, but it's felt that way. Equity futures this morning are positive, up 73, Tom, positive around about 2.44%. We're looking a whole lot better than we did, let's say, yesterday in the equity market, where the S&P 500 fell by 2.81%. As we say in the Treasury market, all-time lows on a 10-year at one point anyway, just north of 1% now at 1.000%.
The Bloomberg NJIT STEM report, it's brought to you by New Jersey Institute of Technology, offering an MBA that provides STEM professionals with a technology-focused experience. Learn more at njit.edu/MBA. Here's Bob Moon.
Tom, Lisa, Jonathan, good morning. Here's what's making news in science, technology, engineering, and math. trade events that are particularly important to the tech industry are quickly going dark across the globe due to the new coronavirus. Google just called off its flagship conference in May, an event called I/O 2020, which brings together thousands of people from around the world who partner with or build apps and websites for Google's digital services. An email sent to participants said the company will give refunds and look for ways to hold sessions digitally instead. Taking the shows online with streamed virtual events is one way to reach customers, but marketing experts say they're no substitute for face-to-face contact with potential clients, taking away sales opportunities that may be difficult to make up. Facebook already canceled its major developer conference, F8. Microsoft called off a similar gathering. The Game Developers Conference and Mobile World Congress also were scrapped. Apple's major conference, WWDC, is typically held in June, but the company has yet to announce the event this year. Apple, meantime, has restricted employee travel to two nations hit especially hard by the virus, Italy and South Korea, after recently instating a similar policy for China. An internal memo also encouraged virtual meetings. And the virus has prompted both Google and Microsoft to offer limited-time free access to their advanced teleconferencing and collaboration tools. That's the Bloomberg NJIT STEM report. Tom, Lisa, Jonathan.
Babu, and thanks so much. John, quickly here, and I missed this morning. Folks, it's such a blur here that you do miss things. And I missed the stunning, almost 4 standard deviation move over 10 sessions of a stronger Chinese yuan. The renminbi down to a 6.92 is something not to be ignored by the street.
I would agree with you. This morning, though, I'm interested in that dollar, just bouncing back a little bit. The euro rolling over, down 0.4%. Euro dollar back to 111.26. We've had this massive euro surge, Tom, over the last couple of weeks.
Euro
I think it's taken a lot of people by surprise.
Yeah.
Well, a lot of money going back into the euro
flows.
because it was used as a funding currency for some of the trades out there in emerging markets.
You wonder, you wonder about the president and his comments on this, but I really wonder what Madame Lagarde would like a level of euro to be.
Be nice to hear from the ECB, wouldn't it? Up 70 points on the S&P 500. This is Bloomberg Surveillance.
With a Bloomberg Business of Sports report, I'm Michael Barr. The NBA has told players to avoid high-fiving fans and strangers and avoid taking any items for autographs as the league responds to the coronavirus. The league, in a memo sent to teams and obtained by the Associated Press, offered 10 recommendations to players with hopes of decreasing risks of getting the virus. Among them, not taking items such as pens, markers, balls, and jerseys from autograph seekers. Federal prosecutors and investigators conducting a wide-ranging criminal probe of U.S. Olympic sports are said to have interviewed the parents of star American gymnasts, including Simone Biles, as they explore whether there were financial improprieties involving the former head of USA Gymnastics. People familiar with the investigation told Dow Jones the gymnasts' parents have told investigators that Steve Penny had sought to act as Biles' agent. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, Super Tuesday. They're still counting the votes in Maine, and California still not called by several news organizations, with Sanders holding the lead there. But Super Tuesday was especially super for Joe Biden, as we hear from Phil Mattingly.
You can't talk about Joe Biden's night without talking about his run through the South. Virginia, North Carolina, Tennessee, Alabama, Arkansas, Oklahoma, huge wins throughout the course of those states, taking advantage of demographics that had a lot of non-white voters, all of whom went very heavily towards Joe Biden.
Biden also tops in Texas, Massachusetts, and Minnesota. Steve Kastenbaum covering Bernie Sanders.
Sanders is sounding optimistic.
Let's go on to the White House.
But he didn't have the Super Tuesday he was hoping for. He set his sights on Joe Biden.
You cannot beat Trump with the same old kind of politics.
Sanders winning Vermont, Utah, and Colorado, and that lead in California. Warren and Bloomberg said to be reconsidering their candidacies. I'm Michael Toscano.
Why all the top-tier experts? Because business is not a magic trick.
Give us a sense of the economic backdrop.
Bloomberg Markets.
Which financial records are these?
Weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and futures on the rise. S&P futures up 73 points, Dow futures up 712, and NASDAQ futures up 214 or 2.5%. The DAX in Germany is up 1.7%. 10-year Treasury down 430 seconds, yield 1.01%. Yield on the 2-year, 0.69%. NYMEX crude oil is up 2%, up 92 cents at $48.11 a barrel. COMEX gold up 0.2% or $3.40 at $16.47.80 an ounce. The euro 1.1126 against the dollar. The yen 107.66. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. Again, futures up 73. We need an update. We need an update on Super Tuesday, on this Super Wednesday. Here's Michael Barr.
Tom, John, Lisa, thank you very much. Former Vice President Joe Biden dominated Super Tuesday, winning 9 states, including a projected win in Texas. The Democratic nomination is now a 2-man race as Biden pulls ahead of Senator Bernie Sanders in the delegate count. Speaking to supporters in Los Angeles, Biden said his campaign is still alive.
For those who've been knocked down, counted out, left behind, this is your campaign.
Sanders won the delegate-rich state of California. Former Attorney General Jeff Sessions is heading into a runoff as he tries to reclaim his old Senate seat in Alabama. Sessions will face off against ex-college football coach Tommy Tuberville for the Republican Senate nomination. Sessions has failed to gain the endorsement of his former boss, President Trump, who soured on Sessions after he recused himself from the Russia investigation. Speaking to supporters last night, Sessions says it has been an honor to serve the people of Alabama for nearly 2 decades.
I came out of the very soil of this state. I love Alabama, and I'm proud beyond words to be able to serve her citizens. I look forward to this runoff with Tommy Tuberville with great confidence.
The runoff is scheduled for March 31st. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael Barr, thank you, sir. Thank you very much. Let's turn to another guest now, shall we? Joining us on the phone, I'm pleased to say, Ian Shepperton, Pantheon Macroeconomics founder and chief economist. In a simple tweet from you yesterday, the Fed cuts, sense prevails. Why did it make so much sense?
Well, they did what they had to do, I think, to put a firewall in markets. Of course, it didn't look like that yesterday afternoon, but it does this morning looking at futures. Markets were screaming at them to move. This was not the occasion for the Fed to say no to markets. You know, I appreciate that sooner or later that day might come, but this is not the day to say no to markets. So they had to do something. As Chair Powell said, look, you know, interest rates can't fix the coronavirus, but they can ameliorate some of the consequences of the coronavirus for markets and for the real economy. So I'm happy they did it. I'm delighted that they didn't try and tough it out till the March 18th scheduled meeting. And I think there's a very decent chance that they'll move again before the middle of the year. But so far, so good.
One of the reasons to be on LinkedIn, folks, is good people like our guests, say Dr. Bremer, Dr. L. Arian as well. Pantheon Macroeconomics is absolutely exquisite out on LinkedIn. I love your chart, Dr. Shepperton, this morning. The PMIs are still not reflecting the virus. When do they?
Well, China's PMIs have absolutely cratered. And usually when China's PMIs move, the manufacturing numbers in the US respond within about 2 or 3 months. So I'll let you into a secret. If you're forecasting US manufacturing, most of the time you look at China 2 or 3 months ago. My guess is that the lag this time will be much shorter than that, and that we'll see a more or less immediate response to the virus story. So unfortunately, I think March surveys are going to be horrible. But I think they might be about as horrible as they get, and they won't be as bad as China's numbers, because obviously China is the epicenter of the outbreak.
Say good morning to Bloomberg 960, the Bay Area and San Francisco, and on down south. We've seen, folks, the articles coming out of Long Beach is part of the stress there coming.
Really?
Yeah.
Let's get to the numbers out of China. 26.5, the services PMI. Here's a story for me, Ian. Might get a read on manufacturing out of China and what it means for the United States. Talk to me about services. What's the read across there?
Well, services also hit extremely bad in China, but not a lot of impact yet visible, in the U.S. I think that will come if there's a significant outbreak in the U.S. But right now, with cases under 100, it doesn't seem to be happening at the moment. That number's obviously going to change, obviously going to go up. But I don't think we're going to see a sort of a Wuhan-style outbreak in the U.S. or indeed anywhere else. That thankfully seems to be the outlier. So I'm expecting that we'll see some hit in the services numbers over the next couple of months, but I don't think it'll be anything like as severe as in manufacturing, where you've got both problems. You've got a loss of demand and you've got enormous disruption to the supply chain and huge uncertainty about when things will be restored. Plus, of course, manufacturing is the front line of the trade war as well. So, every possible ill that could befall the sector is there right now.
Ian, you said the Fed had to act and had to respond to the market. And there are two ways to read the stock market response yesterday. One is they didn't get enough, throwing a tantrum, or sell the news, buy the rumor. There's another way of reading it, which is the stock market reassessing the potential impact economically of the coronavirus. Do you think that the markets should be pricing in a recession scenario or a much, much higher likelihood of a recession in 2020?
Well, certainly a higher likelihood than there was a couple of months ago, that's for sure. It would be reckless to think anything else. But right now, as bad as things are likely to get in manufacturing, remember it's only about 12% of the economy. It accounts for less than 9% of payrolls. This really is a domestic services economy. So unless we get a coronavirus outbreak that's bad enough to keep people home for an extended period, keep them away from the mall, away from the movie theater, away from restaurants, then I think an outright recession is not the most likely outcome. A slowdown is more plausible. But of course, we're in the lap of the virus gods here. We just don't know, and it's not difficult to construct a scenario where you do get a recession if the virus outbreak is bad enough. Everything comes back to how bad the outbreak is.
Ian, thank you so much. Ian Shepherdson with Pantheon Macroeconomics. Again, I can't say enough about he and Priya Bamish's work out on LinkedIn. Some just world-class charts that they've been showing on all the dynamics that we've been seeing here. Speaking of dynamics, John, I'm going to round it up 1.01% on the 10-year yield. Crisis over.
Crisis over for about 5 minutes, maybe. The price action of the last 5 minutes seems to shape the narrative these days. For me, Tom, looking at the data, just remarkable out of China. It comes in at 26.5 and everyone says, yeah, okay, clearly obvious. We knew it was going to be bad. But then you look at the estimates. The range of estimates, the low going into that was 40.
We're all guessing.
The low going into that was 40. The high was 51.1. I'm not sure who did that. But yes, we're all guessing, but clearly we're missing how big the move is to the downside in the economics community, looking at this data.
I would warn our listeners and viewers worldwide that the word annualized right now is particularly hazardous. You take a data point in a first quarter, China lousy, and then people will extrapolate it out by saying annualized out 4 quarters. And it's a fair game if you're math savvy. If you're not, it's a little bit inflammatory.
I thought that it was interesting overnight. We also got some services PMIs out of Europe, and they all came in disappointing. So I think that's something to watch. To Ian's point, at what point does this bleed into services, into the demand side, not just the supply side? And I think that that's what people are trying to figure out. That's when it's going to bleed into recession.
The story for a little bit later. Shall I get you some market action? Futures positive quite nicely too, up 69 on ES.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize-change.
This is a Bloomberg Money Minute. Wall Street looks headed for a rebound at the open today as investors take in surprises from the presidential primary, Super Tuesday yesterday, and expectations of global policy responses to the coronavirus outbreak after the Fed's emergency rate cut yesterday. Dow futures up more than 700 points this morning, but the Dow yesterday fell almost 800. JP Morgan Chase is asking thousands of U.S. employees in its consumer operations to work from home as it tests a contingency plan for closing domestic offices should the coronavirus spread. Last week, the bank restricted non-essential international travel for everyone and has been urging workers to test out their remote access capabilities. The biggest drop for mortgage rates in 9 years is fueling a flurry of refis and an increase in mortgage application activity overall. Refis rose 26% to the highest level in almost 7 years last week. The average 30-year fixed rate was 3.57%, down from 3.73 the week before. Gina Cervetti, Bloomberg Radio.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People are talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The good news is the economy is strong. The bad news is the economy is strong.
Financial crises take a really long time to recover from.
Finance.
The strong job market's pulling people back in.
You can't have for very long, monetary union without a fiscal union.
Investment.
What we preach is extreme diversification.
It's hard to have sustained productivity without capital investment.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
It is a moment of singular events, whether it is the Biden victory of Super Tuesday or maybe it's what we saw from Chairman Powell yesterday. And then there are headlines that give pause. Moments ago, the nation of Italy says they will close schools and universities nationwide. That is one of the stories we're following this morning, the continuing linkage of this medical pandemic with what we see in the markets. John Farrow, just to get right to it, futures up 70, now up 63. The whole market just quietly retrenches in on the Bloomberg terminal off this shocking headline out of Italy.
With the emphasis quiet, because it's not a massive move. Even in Italy, where 10-year yields are still down on the session, we're down a couple of basis points still. This according to Answer, but I think we were waiting for this announcement anyway. Many schools and universities in the northern part of Italy had already started to close. Some of the games in Serie A, the Football League, had been suspended until March 8th in the affected regions. What's interesting about this is the nationwide part of it, that it's not just the north of Italy they're looking to mitigate things now, it's across the country.
And we saw it personally in New York City. Lisa, you and I are living this. I mean, you got the cherubs going to school, and you're wondering, what do we do from Westchester to a hospital in Manhattan? It's just two people among 15 million, 18 million, whatever the greater metropolitan region is, and yet everybody changes just off those two announcements from the city of New York.
Well, yeah, there's a question of what happens if there is enough exposure to close down the schools. What happens to you and I? Who takes care of them, right?
Do we work remotely? I mean, should we tell them that we do?
You can work remotely.
I will just say, it is interesting. The move that I think is most interesting on the back of that headline is the euro. More weakness versus the dollar. And again, especially as the U.S. seeks to contain this, the more that this spreads in Europe, I do have to wonder how this is going to bleed into the economy there.
Yeah, across Europe, I think we face the very real prospect now of Italy going into contraction in Q1, likewise in Germany too. Tom, you can throw Japan into the mix as well. You can throw South Korea into the mix. These are some really big economies that are facing contraction in Q1 and maybe Q2 too.
We're doing this so much, folks. We're working on this 24 hours a day with a great team behind us here through all of our radio morning and what we do on TV as well. Great. Let's go back to first principles. The Fed cut 0.5 percentage point. Can others do that? I mean, that's an arch question this morning.
I don't know if others can go 50. Europe would certainly struggle, that's for sure. But others can do more. And I think that's that tension in this market this morning. More negative news around the coronavirus. We're facing that every single day. But now the market's sort of taking this in and thinking, well, okay, what do you do here? Because you could get smacked around the face a couple of hours later by another rate cut, maybe a little bit more on fiscal. And that's the thing that's still left supporting this market. Just underpinning, if there is any bullishness out there, just underpinning it a little bit still is the idea that policymakers still haven't fully responded to this.
Futures up 62, green on the screen after the good news yesterday and then a really difficult afternoon yesterday. Let me give you those levels on the S&P 500, 3,057, and on the Dow, 26,480 right now on the Dow Jones Industrial Average. Watching all this, a synthesis of equities, bonds, currencies, commodities, is Mr. Levitt of Invesco. Of course, Brian Levitt joins us here out of Michigan Economics, and of course with a more holistic view. Have you changed your view, Brian? I mean, that 87-page white paper that Brian Levitt delivered December 1st, is it still valid?
No, it's not. It's not. I mean, Tom, this was going to be a year of supportive monetary policy, stabilizing growth globally as we moved slowly beyond the uncertainty of the trade war. And I thought this was going to be a less volatile year in markets.
Nailed that.
Because I thought, I nailed that completely, because policy would be so supportive and growth was going to stabilize. And so, we've now run into extreme economic uncertainty at a time when the global economy was only just starting to stabilize. So it came at an inopportune time. I think what's important is I'm still of the mind that this is a long-term secular bull market. You can have recessions or disruptions in economic activity within long-term secular bull markets. So that's what we're dealing with right now. But, in terms of stocks being cheap to bonds, in terms of banks being well capitalized, inflation being benign, we still have all of that, which creates a nice longer-term market. We're dealing with short-term disruption in economic activity.
Brian, the bet, I think, for a lot of people is, what does the second half of 2020 look like? What's your Q3, Q4 view look like? And I just wonder what underpins that and what would change your view of that. What would you like to see from policymakers that would make you more bullish the second half of 2020?
Well, let me take both parts of that. I mean, if you use past outbreaks of infectious diseases, you would expect to see, at some point we get into a period where it looks like cases have peaked, policy has some response, and some pent-up demand returns. So you can look to SARS in China in 2002-03, and you saw a pretty significant reacceleration in economic activity. And so we will ultimately get there, Jonathan. It's just simply a matter of when do we get this under control? Now, with regards to policy, you've been out in front of this as well as anyone, is that the most important thing is to make sure that for those businesses that are challenged in a weak demand environment, that there is support provided to them, whether that's on the fiscal side or the Federal Reserve providing opportunities for banks to create loans or liquidity. That's all going to be very important. So the 50 basis point cut is probably just a first symbolic gesture to investors. What you really need to see is, if this persists, a response by policymakers to make sure that we don't see a wave of companies going out of business.
And let me tell you, Brian, if we saw some of those policies, I'd be far more constructive on the second half of 2020. Never mind the rate cuts. If they can come in and target those SMEs, support them, provide a bridge to get to the middle of the year. The downside risk here, though, Brian, I think for the whole year, is that they don't. And what happens if they don't?
Yeah, that's right. And, so you get back to what are the questions you always have to ask yourself. What's the direction of the economy, which is obviously decelerating? What is the policy response? We're all hopeful it will be increasingly more supportive. I mean, look, parts of the market are already suggesting some pretty extreme negative outcomes. I mean, rates below 1%, copper-gold ratio near 2008 levels. So parts of the market are doing a good job of pricing this in. I think the equity market would obviously have to continue to correct among more uncertainty. I just don't see, after all we've done to support this expansion, why we wouldn't respond on a policy front to provide support to the economy and to the companies.
Brian Levitt with us with Invesco as we continue this discussion. Futures up 70, now up 57 as well. On gold, 16.47 the ounce, up 3. Thank you to Dennis Gartman for joining us on short notice yesterday. Lisa, Gartman's call on gold in yen was just extraordinary.
Yeah, people going into gold. And the real question that I have is, how close are we to a recession, and what are the potential hits to earnings if the coronavirus does continue to spread? I was just looking at some estimates overnight, Bespoke Investment, mapping out a scenario in which the coronavirus causes earnings per share to shrink by 20% temporarily, which would translate into a 40% decline in the S&P from its mid-February record. Citigroup saying that a recession would shave another $30 off EPS projections for 2020. Brian, is this the right model to be running, this type of recessionary case scenario and the potential further declines for equities?
Yeah, I mean, it's obviously, it makes sense to think back through history and what have you seen from earnings in a recessionary environment. Again, whether or not this is a technical recession, it is a pretty significant decline in economic activity, and so earnings will be under pressure on that. The question then becomes for investors, again, is how long does this persist, and what multiple are we willing to pay on those earnings? So again, I think we know we'll move out of this. I think ultimately we will see the medical community get out ahead of this. We will see policymakers respond, in my opinion. So I don't think we're going to be at those types of extreme levels. And ultimately, we're going to be left with an environment where most of the safe haven asset classes have been bid up considerably, and it will ultimately create a buying opportunity for equity investors, as it always does.
Well, Brian, let me put this question to you to round things out. If you needed a call option on a better second half, would you take that through growth or value in U.S. equities?
I would take it through growth, and growth stocks will likely have been holding up better than the more value-oriented parts of the market that need a sustained acceleration in economic activity, and so I think this continues to be an environment where we favor true growth companies. This is a reminder that it's a weak growth environment. It's a reminder that it's weak enough that we are very susceptible to shocks, and that favors true growth companies wherever you can find them.
Brian, thank you so much. Brian Levitt, of course, with Invesco this morning, and that's a real interesting conundrum. We saw that yesterday on high beta, low beta, the idea of growth versus value as well. Futures up 52, Dow futures up 538, putting the Dow 26,417. With our news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. Former Vice President Joe Biden has carried momentum from his win in South Carolina into Super Tuesday, winning at least 9 states, including Texas. It was just days ago his campaign was teetering on disaster. He spoke to a huge crowd in Los Angeles.
Very much alive! And make no mistake about it, This campaign will send Donald Trump packing. This campaign is taking off. Join us.
Bernie Sanders won the delegate-rich state of California. Iranian state television says Friday prayers have been canceled across all provincial capitals amid the country's growing coronavirus outbreak. Iran says that the new coronavirus has killed 92 people amid almost 2,900 confirmed cases across the Islamic Republic. Meanwhile, Italy has closed schools and universities nationwide because of the virus. Tennessee is under a state of emergency after the deadliest tornado in 7 years. Putnam County officials went door-to-door searching for 150 people in standing structures. They are aiming to find people in the subdivisions hardest hit by the severe weather that happened in the county. Putnam County Mayor Randy Porter.
The saddest news I have to update you on is our death count that has now risen to 18, with some of those being children.
Another twister hit central Nashville. The total number of people killed is at least 24, and hundreds of buildings were destroyed in the Tennessee storms. Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg John.
Michael Barr, thank you. Thank you very much, sir. Let's get you up to speed on this price action, shall we? Across the Bloomberg around about 10, 15 minutes ago that Italy will be closing all schools and universities nationwide. This according to ANSA News Agency. The price action capturing the story as follows. On equity futures, we roll over in the United States just a little bit off session high, still positive 1.7%. A huge reversal over in Italy. We were positive as much as 2.1% earlier in the session. We're now up just by 0.9%. There was a bid in the Italian bond market, Tom, just slowly as the minutes roll on, as the session grows older, we start to give some of that up. Sentiment just starting to turn. It's subtle, but it's there.
I totally agree. Subtle is a key word here, folks, but subtle after what we've put up with the last 4 or 5 sessions, a huge deal. We're doing 4 digits on yield quotes for the most part. We were over 1% in the 10-year, John, then a 0.99, and now to 4 digits, 0.9876. Nowhere near the tension of yesterday afternoon, but the yield coming in. And yes, I have to say it's that shock announcement from Italy.
Equity futures on the S&P 500 now up just 47 points, positive by 1.58%. Through the next couple of days, you will get a read on the labour market in America. A little bit later, we'll hear from the ADP, Tom. Initial jobless claims coming up tomorrow, and it's payrolls Friday coming up on Friday. I said this yesterday. Yesterday was only Tuesday. It's only Wednesday. Doesn't it feel like the end of the week?
Wednesday. It
feels like the end of July already.
It's Super Wednesday.
Super Wednesday.
We're just doing, it's like our normal 33-hour week.
From New York City, this is Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Influential conversations from Bloomberg Television. Here's Yvonne Mann.
Singapore is implementing more measures to counter the impact of the coronavirus outbreak. It says its immediate task right now is to boost tourism in the country with plans to upgrade hotels and attractions. Of course, the move comes on the back of a budget that aims to provide $5.6 billion of economic stimulus. Let's get more with Singapore's Trade and Industry Minister Chan Chun Sing. Minister, good to have you with us. First off, though, I want to talk about the coronavirus outbreak and how the Fed has moved on the back of that. How did we go from a virus that's common just like the flu to a 50 basis point cut by the Fed?
Well, I think it's not exactly like the flu, and I think that's what people are worried about. So if you talk to most of the medical professionals, I think they are working on a couple of scenarios. One is that this is what we call a V-shaped situation where people might recover, the economy might recover quickly, but there is a growing concern that this might take a while in a U-shape or even an L-shaped situation. So I think what you have seen the Fed done yesterday is to make sure that they show up the confidence. But I must say that it takes more than just a Fed cut to restore the confidence, because people must see and feel for themselves the confidence in how governments are handling this in a coherent way.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, 8:17 on Wall Street, and we have breaking economic news crossing the Bloomberg. We get all the details with Vinny Down Judice. Vinny, good morning.
Hello, Karen. The ADP payroll report showing a respectable gain, 183 jobs added at businesses in February. However, the prior month revised substantially lower by almost 90,000. Again, the ADP payroll report February up 183,000. I'm Vinny Down Judice. Karen, back to you.
All right, Vinny, thank you. And futures are on the rise this morning. We go to the First Word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning.
And good morning, Karen. U.S. futures are holding steady since the last time we spoke, with Dow futures up 580 points. S&P's gained 56, while NASDAQ futures climbed by 159. The U.S. 10 yield at 0.99%. Gold is trading higher by 5. And Shanghai rose 0.6% overnight. While European markets are paring some gains right now, as Italy will be closing schools and universities nationwide until mid-March. After the bell last night, Nordstrom reported shares are down 7% in the pre-market. And in other news, GE guided lower for Q1. Wrapping things up, Altria was raised to hold from sell at CFRA, and Home Depot raised to buy over at Nomura Instinet. Live from the First Word breaking news desk, I'm Bill Maloney. Karen?
All right, Bill, thank you. To hear live breaking news over your Bloomberg, type squawk on your terminal, SQUAWK, and that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. The revision on ADP comes in nice. A little bit of a lift here. I'm going to say a churn for the market. We'll leave it at that as we've got such terrific news flow today. Yesterday's most important tweet was the character that came out and decided that John and I aren't on speaking terms. That's true. But one of the things that keeps us going is my awe of how the gentleman from Great Britain actually is encyclopedic on American politics. And John, you were just doing it with our next guest, going back to the nuances of 08, the nuances of the foreign debate versus the domestic debate, and how things can change as they have in the last 48 hours, I would say the last 2 weeks, for the President of the United States.
Yeah, when the consensus just gets it dead wrong and you get overtaken by events. I was catching up with Rick Davis, and I'm really happy to say Rick is with us, the former McCain 2008 campaign manager and now Bloomberg political contributor. Rick, I've been telling Democrats for about 10 years, maybe more now, that without the financial crisis, without the economic downturn, Senator McCain became the president. Wouldn't have been Barack Obama.
Yeah, there was a moment once when Joe Biden was giving a speech a couple of years ago, and McCain was in the room, and he looked at John, and they were very close friends, and said, without that downturn of the economy, Barack and I both know that you would have been president of the United States. And look, that's what the data showed. But look, I mean, that's why politics is never decided until you get around to voting. And that's what we saw last night. Everybody had written off Joe Biden. He was yesterday's news. He'd started out this, presumptive front runner in the campaign 2 years ago and couldn't hold on to it. And last night, he made his returns. Back to the future, Joe Biden.
How do the events that we're living through right now potentially echo what we saw in 08? And I'm not talking about the devastation we saw to the economy. I'm certainly not saying that's going to play out. But any kind of economic downturn, does that have to change the calculus once more?
Yeah, look, I mean, the world's a dangerous place, right? And it comes to our shores on a pretty frequent basis. And coronavirus is a very good example of something that was not generated in the United States, but it's dramatically going to affect our economy, our public health situation, and people's fears. I mean, when you look at the direction of the country, and you ask voters, do you think we're in the right direction or the wrong direction? There was already a tip toward the wrong direction, all right? It was about 60%, even in a good economy. But you throw a public health crisis on top of that, that'll be in the 80 percentile, and all of a sudden it's throw the administration out.
Rick Davis's charm, folks, is not only what he does in politics, but also his mathematical acuity. Give us the mathematics, the statistics for the President of the United States that without question yesterday, the youth vote didn't show up. I'm going to assume the president gives up the youth vote. What's it mean to him that they didn't show up for the Democrats, mathematically?
Look, I mean, the youth vote is always that holy grail of American politics, right? You want to own them when they're 18, right? You get them when they register to vote, and they'll be yours for the rest of your life. And certainly this generation, the millennials and the Generation Zs, I mean, it's 100 million voters. It's no small thing. It's bigger, than the generation I grew up in. And we controlled politics for 25 years. So it is an important aspect. The downside is statistics never lie. And the worst turnout that you have in a demographic folio is the young voters between 25 and 18. So, I mean, they consistently underperform. They do it especially in primaries. But you would also anticipate that this is going to carry over into the general election.
I was also struck last night by the number of people who made a last-minute decision, particularly when it comes to South America, South Carolina. My mind is
sometimes South Carolina can seem like South America.
No, but South Carolina, it seems like a large proportion of people decided as Joe Biden was down there campaigning. What does that tell you going forward about the conviction within the Democratic Party, about the nominee, about the importance of campaigning? I mean, is this normal?
Yeah, I think we saw a little bit of a flight to safety, in South Carolina and subsequent to that. Voters were a little unnerved by Bernie Sanders, right? When you go on to national television, you start defending, Fidel Castro, it gets a little unnerving. When you talk about, disrupting the American healthcare system in a way that takes away people's private health insurance, it's disrupting, right? And so here comes Biden, who he has a lot of faults as a candidate, right? I mean, the reason he found himself into trouble was his own doing, and he ran a really bad campaign. He wasn't a particularly good candidate, but he found himself the beneficiary of a flight to safety in South Carolina, where people said, hey, we have got to stop this crazy guy, Bernie Sanders, from running away with this nomination.
This is critical. What's the then what for a guy who you just said has been a lousy candidate? How has he become the better candidate? How does he become some elements of his former president, Mr. Obama?
Well, Biden had run for president twice before and had been a lousy candidate then too. And I think you can anticipate him still being a lousy candidate next week when they go into other states. And Rick, so this thing is not over yet.
I'm just thinking if he secures the nomination, I'm just seeing him there on the stage, on the debate stage with President Donald Trump, and the energy of President Donald Trump just overwhelming the likes of Joe Biden.
Yeah, I think that never underestimate Joe, right? I mean, a lot of people thought he was down and out this time around, and he's a very bright guy. He has articulation issues. He couldn't remember his wife's name last night on the stage.
Why are you looking at me when you say that?
I'm just panning the room. Guys our age, sometimes we can't really think that fast. Sometimes those lips move quicker than the brain does, and that's always been a Biden faux pas is his middle name. So I think you can anticipate this being a rocky road, and the general election, though, it's a study in character, right? You have Joe Biden, who's lived his life down the straight and narrow, right? This guy doesn't have a scandal anywhere near him. And then you have, Donald Trump, who embraces scandal, almost self-generates it in case, it gets boring around the White House. He'll do something else.
Rick Davis, great to catch up with you, former McCain 2008 campaign manager and Bloomberg political contributor. Just want to get you up to date on some news. ANSA news agency were reporting that Italy would be closing schools and universities across the country. The education minister now on the record saying no decision on a school closure just yet. Equity futures just with a little bit of a bounce off the back of that. The S&P 500.
Apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is a Bloomberg Money Minute. Stock futures point to a rebound after the Dow yesterday tumbled almost 800 points, despite the Fed making an emergency interest rate cut of 0.5%. Investors still unsure about whether that's enough to blunt the potential economic impact of the coronavirus outbreak. Health stocks and insurers may outperform the broader market today after Joe Biden's Democratic presidential campaign was given new life on Super Tuesday. Wall Street looks on a Biden candidacy more favorably than that of Bernie Sanders, who has campaigned on the promise of Medicare for all, which poses a threat to private insurers. As the number of confirmed coronavirus cases rises in the U.S., people are not venturing out to stores as much. One data provider says foot traffic fell by just over 3% last week for the fourth straight week of declines. Walmart and Best Buy have already said the outbreak could cloud their full-year outlooks. Dow futures up 560 points. Gina Cervetti, Bloomberg Radio.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance?
Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening. That saying, success breeds success, it's true.
Are we seeing any improvement?
Carol Massar and Jason Kelly.
How would you describe your outlook?
Weekday afternoons at 2 Eastern on Bloomberg Radio. Bloomberg Business Week, now live on YouTube. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio. Your price action 60 minutes out from the cash open as follows. Up 56 just off session high. highs, up 1.89% on the S&P 500. We did roll over a touch off an ANSA news agency report that schools in Italy and universities too across the country would be closed. Learning from the education minister in the last 5 minutes or so, the last 10 minutes, that no decision on that school closure has taken place just yet. So equities take another tick higher. In the bond market, here's the state of play for you. Treasuries just above 1% on a 10-year yield. On a 2-year note, just south of 70 basis points at 0.69%. In foreign exchange against the dollar coming back a little bit against the yen, near the bottom of the pile with the euro too. Euro dollar coming down a third of 1%. Yeah. The data, Tom, in focus, the ADP report pretty decent for the month of February. Payrolls on Friday. For me, laser focused on claims coming out tomorrow.
Yeah, claims tomorrow will be of more value than ADP. Peter Bookvar just publishing Bleakley Advisory. A whole bunch of people coming out in ADP. Let me quote directly. The consensus for the private sector Friday is 160,000. I love this. We can just about throw that out the window too. So there you go from Peter Bookvar. To get an excellence on which part of this we should throw out the window, we go to Julia Coronado, of course, to give us perspective. Julia, I thought of you yesterday. I mean, the historic moment of an emergency Fed rate cut. With your work at the Fed and with your wonderful academics at Texas, how did you frame the historical moment of that 50 basis point cut?
Well, Tom, it was, we had anticipated it given the signal of the G7 call. We thought they wouldn't want to not deliver. I think we saw the market reaction was not, that it's a panacea. Monetary policy in this situation is not going to fix the problem.
Is your the laryngitis that you're fighting, Julia, is it Keynesian or monetarist laryngitis?
Well, what I'm hoping is not coronavirus. How do you know, Tom?
Well, we'll get a test kit. We'll get official surveillance test kit for you. Thank you for being a trooper and being out with us. Let's go hear a bit more, Dr. Coronado, and then we'll cut it short so you can go have a dram of scotch to get through the morning. Julia, when we look at the economics of the moment, how do you extrapolate forward? I mean, your timeline becomes so changed. How do you look forward 1 week or to the Friday jobs report or even out 1 quarter?
Well, as you mentioned, the job report is going to be a little bit stale. And, the sectors that we're going to look for in the coming months will be, say, leisure and hospitality, travel. These sectors are going to be tremendously hit in the next few months, both in spending, probably bleeding into hiring. So we are going to see a slowdown in activity in Q2.
Julia, are you worried we're going to see this in claims in the next couple of weeks? The claims are going to start to lift a little bit higher here?
We could probably see a little lift in claims, yes. We think about the sectors that are going to be hit. Some of these people aren't going to be eligible for unemployment insurance. You're going to see probably the hourly workers get laid off first. So it may not show up entirely in claims.
Yeah.
But you probably would expect a little bit of a lift in claims, yes.
Julia, it's been such a big focus of this program over the last couple of weeks. How do we support the small and medium-sized enterprises to make sure they don't have to lay off people for what could be just a temporary economic shock? How do we do that?
That's really a fiscal question. I mean, we really need a coordinated fiscal response here. We need some liquidity, maybe through the Small Business Administration, through FEMA. There's all kinds of ways that the federal government could get money in a targeted fashion to affected areas. I don't see any evidence that the administration has plans for that. I think we need to start talking about that, because why let this economic hit sort of spread and deepen in the way you're describing?
Yeah.
You want to ensure this shock.
Julia, as a former Fed researcher at the Central Bank in Washington, I'm just trying to understand how they're modeling out the potential effects of the coronavirus, what data they're looking at, what they're responding to. Clearly, they were responding to a material shift in expectations going forward. Stocks trying to take that and figure out whether that means recession. How likely do you think that is the outcome here?
So I think modeling the direct effects is easier. Say, you can think about the interruption in activity in certain sectors, what we're seeing, how it's likely to spread. The knock-on effects through confidence are the things that the Fed is trying to insure against, right? The hit to consumer confidence, a broader sense of, pullback in business investment and consumer spending. So I think that's what the Fed is trying to keep on the tracks, which has been pretty good in recent years, very resilient to a lot of bad news. So I think that's the aim. If that gets hit and we see consumers just sort of hunker down, then you're in trouble.
Dr. Coronado, in microeconomics, one of the great moments is when you have to try to figure out income and substitution effects, and that leads to all sorts of ambiguities. What's the arch ambiguity for Chairman Powell right now? Is it ambiguity about the dollar, about no inflation, yes inflation? I mean, what's the unknown out there for the chairman?
Well, and Tom, as you're putting your finger on it, the income and substitution effects. In an older society, lower interest rates can be, more painful to the older generation that's relying on that income, and they can, sometimes have to save more as a result. So you get less bang for your buck.
Oh, come on, Julia, you're being. Come on, get the piece of chalk in your hand.
Room of regret.
Get some Vicks Vapor Rub to get you through the day. Dr. Coronado, you're in a classroom right now, and you're looking at an actuarial assumption that's going to 4% or even 3.8%. That's going to turn on its head our American financial society, isn't it?
It will, yes. And Tom, yesterday was a dramatic day. The drop in yields at the 10-year point below 1%, it's astonishing where we are. And, of course, for the Fed, forget the income and substitution effects. They're out of ammo. They're running out of tools. And that's I think there may be that kind of existential worry in the markets, this realization that, oh, my goodness, here we are. Now even the Fed is out of ammo.
Are we questioning the Fed put here, Julia?
I think there's a little bit more underlying concern about that now. I mean, obviously the Fed can do QE, and they will if they have to. The impact of that is less powerful when yields are already as low as they are. So, a lot of the clients I talk to, there's a lot more discussion about what comes next. What's the Fed going to do, and what is the impact going to be? We have a real shock here. This coronavirus, it's transitory, but it's real. We know it's going to hit the economy. Yeah. So, the ability of the Fed to insure us against this, I was hoping with the G7 announcement that we were seeing more evidence of the kind of fiscal monetary coordination that we're going to need when we get a real shock, the zero lower bound. But we really didn't see much follow through on the fiscal side, certainly not in the U.S.
Yeah.
So, I think that's the reality, is that fiscal policymakers are going to have to pick up the ball here.
Julia, you're a trooper to be with us today. Nurse Amy emails in Dr. Coronado and suggests you go to the Joe Coy School and Hospital there for your laryngitis, and she recommends you put Vicks on your eyelids, and that's usually a good way.
Vicks on your eyelids.
Vicks on your eyelids.
Idea.
That's from the Joe. She's a staff nurse at the Joe Coy Hospital.
Can we make sure that no one takes medical advice off you on this program?
That's from Dr. Coy.
Julia, thank you. Julia Coronado, the Macro Policy Perspectives President and founder.
Our guests come on with us when they're sick and ill. It's really
because they're determined to be on a program, and I think that's a beautiful thing.
Did we pay her to do that?
We probably did. What do you make of the criticism that this Fed got yesterday, Tom? I just thought they're damned if they do, damned if they don't.
Exactly.
They set the threshold to act. They said it was a material reassessment of the outlook. Yeah. We breached the threshold. They cut. I didn't like the communication going into it. I didn't like the communication coming out of it. But they're on their own. And I think that's the biggest story. No one else is doing anything.
You go around, and this is in London. I'm sitting having a beverage of my choice in some fancy hotel, and I'm looking out the window at a statue of some guy from the 19th century who was famous. I can't remember who it was right now. It doesn't matter. And what's important is these guys that are on these statues, these public figures, they're overcome by events, just like you say.
Yeah, I think all of these guys are overcome by events. This is a really, really serious moment. And the lack of action, the amount of complacency is absolutely palpable. And I'm not just talking about here in the United States, I'm talking across the continent in Europe as well. Why are we still just staring at central banks hoping that they're going to do something? We've got a big problem on our hands. We've got SMEs in Europe and the United States that are facing a real demand shock, not just a supply shock, but a demand shock. Otherwise viable businesses that may well struggle to get through to the middle of the year. And yet I see nothing coming out of Europe to address this, nothing coming out of the United States to address this. It's almost like they have no idea what's going on. And who are they all staring at? Central bankers, as if the price of money is actually going to do anything about addressing this situation. It is ridiculous.
Well, and there's a big question here also underlying the central bank's actions, right? I mean, if there is a material reassessment of the financial picture, of the economic picture, what do they see that the rest of the market hasn't been seeing or pricing into earnings? And I think that that's the reaction that we saw in stocks. Or what are they responding to that could potentially be worse than others are currently looking at? And I think that that's the tension underlying markets, because exactly to your point, John, the Fed rate cut, 50 basis point, isn't going to address the real issue. So if that's the case, and if they see a material change in outlook, this isn't going to be very good for earnings.
Yeah, I love the internet. You know, John.
What do you like about it?
Because I have a chart. I have a map permanently of all the bars I've had drinks in London, and it's informative. And I've been
to a few of them with you.
The Guards Crimean War Memorial and the statue of Sidney Herbert, who I don't even know who that is, but there it is.
Very cool. I'll take you to a nice pub next time we're over there.
There's a statue out front that I can look at out the window.
A nice small pub called the Sydney Arms.
The Sydney Arms.
Yeah,
I'm afraid to ask.
You'll enjoy that. We'll go and watch Chelsea on the
Chelsea
TV.
beat Liverpool again. Right now, with the news in New York City, the future's up 60. Here's Michael Barr.
Thank you, Tom, Lisa, John. Total coronavirus cases globally topped 93,000, and infections rose in Europe, where an official in Brussels tested positive. China reported 38 more deaths, and fatalities rose to 9 in the U.S. Cases also surged in South Korea, Iran, Malaysia, and India. ANSA reports Italy will close its schools and universities nationwide until mid-March. However, Italy's education minister says no decision on school closure has been made yet. Meanwhile, the World Health Organization says it's never too late for containment efforts on the coronavirus. Bloomberg's Brian Curtis has more from Hong Kong.
The WHO tells countries never give up the fight, and more governments do take action. South Korea unveils a $10 billion extra budget. The RBI governor says he's ready to act. Hong Kong's de facto central bank cuts rates 50 basis points, just like the Fed. And Japan says the Olympics could be delayed until later in the year.
Bloomberg's Brian Curtis in Hong Kong. Joe Biden has roared back into contender status. The former vice president won 9 of the Super Tuesday races and is now ahead in the delegate count in front of Bernie Sanders. The Vermont senator did win the delegate-rich state of California. The U.S. military says it has conducted an airstrike against Taliban forces in southern Afghanistan only days after American and Taliban officials signed an ambitious peace deal in the mid-eastern state of Qatar. A U.S. military spokesman says that it was the first U.S. strike against the militant group in 11 days. He said the attack was to counter a Taliban assault on Afghan government forces in the Helmand province. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Hey, Michael. Thank you, sir. Thank you very much indeed. Let's get you up to speed on the price action. The ADP report looking decent. Claims tomorrow. Payrolls Friday. Equity futures up 2 percentage points on the S&P 500. In the bond market, what a move we had yesterday. Yields south of 1% for the first time ever. Just north of that level right now. 2-year yields coming down a single basis point. Your yield right now, 0.689%. From New York City this morning, good morning. This is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. The coronavirus is pouring cold water on some luxury property deals, especially some of the ones involving buyers from China. Chinese buyers spent more than $13.4 billion on U.S. homes in 2019, and that's more than buyers from any other country outside the U.S. And that was even during the trade war and a crackdown on taking cash out of China. But now, one real estate agent catering to Chinese buyers in New York tells us he's conducting virtual tours with Chinese buyers through WhatsApp instead of showing them places. Florida was a top destination for Chinese buyers in the U.S. last year, followed by California and then Texas, Arizona, and New Jersey. Meantime, some retailers catering to Chinese buyers say more homeowners from China are now actually staying in their U.S. homes. Instead of leaving them empty or even selling them, they're using them to stay far away from the original epicenter of the coronavirus. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Connecting decision makers to a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, Super Tuesday. A resurgent Joe Biden has scored wins across the country, including Texas, Arkansas, Alabama, Minnesota, North Carolina, Massachusetts, Oklahoma, Tennessee, and Virginia. President Trump has weighed in on the wins.
Just read the president's post-Super Tuesday tweets and you'll know against whom he would prefer to run. The Democrat establishment came together and crushed Bernie Sanders again. Even the fact that Elizabeth Warren stayed in the race was devastating to Bernie and allowed Sleepy Joe to unthinkably win Massachusetts. So selfish for Elizabeth Warren to stay in the race. She has zero chance of even coming close to winning, but hurts Bernie badly.
Progressive rival Bernie Sanders seized Super Tuesday's biggest prize, a win in California. And sources say the future of the Michael Bloomberg campaign is undecided. With this Super Tuesday special report, I'm John Trout.
Sometimes the simplest method is the best one.
I think even I could figure it out today.
Balance of Power with David Weston.
You had a high estimate. It beat your high estimate.
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures on the rise, along with European equities, as investors take in surprises from the U.S. presidential primary and expectations of a global policy response to the coronavirus. This after the Federal Reserve's emergency rate cut. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are up 63 points. Dow futures up 645 and NASDAQ futures up 177. The DAX in Germany is up 1.4%. 10-year Treasury down 430 seconds, yield 1.01%. The yield on the 2-year 0.69%. NYMEX crude oil is up 2% or 95 cents at $48.13 a barrel. COMEX gold down 0.3% or $5.10 at $16.39.30 an ounce. The euro 1.1126 against the dollar. The yen is at 107.55. Stocks may be rising, but for economist Dennis Gartman, it is still risk off.
The trend is now down in share prices, and I think stock prices will head lower, not higher, over the course of the next several weeks.
And Gartman is urging investors to buy gold and bonds. General Electric standing by its annual financial forecast despite a first quarter blow from the coronavirus outbreak that has disrupted supply chains and hurt business activity worldwide. That's a Bloomberg Business Flash. Tom and Lisa.
Thank you so much, Karen. Greatly appreciate it. We welcome all of you worldwide. Good morning, Boston, New York, Washington. Good early morning, San Francisco on a Super Tuesday. Good morning, coast to coast. And, of course, our political team looks forward to 6 days from now where 6 more states will weigh in. And they have a really different character than what we saw in terms of the demographics, the fabric of the nation. And we look forward to that. Good morning, Kevin Cirilli, our chief Washington correspondent, who's given us a terrific perspective. Right now, we are hugely advantaged to speak to Carl Riccadonna of Bloomberg Economics. And I want to go a little mathy here and a little bit calculus. We can do that with Mr. Riccadonna and go back to June 17, 2016, where James Bullard of the St. Louis Fed dropped a mini bombshell called a new characterization of the outlook of the U.S. economy. And we don't need to get into the weeds here, Carl, but Kathleen Hayes speaking with Dr. Bullard today And if this isn't a regime change, I don't know what is. We're under 1% in the 10-year yield. We have a massive, perhaps short-term, perhaps medium-term exogenous supply shock. Vice Chairman Blinder, Professor Blinder of your Princeton, is telling us don't forget about the demand dynamics as well. And it all comes up to a regime change. Is it?
Well, this is going to be a cycle where the Fed doesn't even come close to hitting its inflation mandate. So there is a regime change on that front, and certainly the Fed is learning that this is an economy that doesn't produce a lot of inflation, doesn't produce a lot of wage pressures, and therefore the Fed can try to run things hotter than it did in prior cycles. That being said, it's hard to describe it as running hot when you're not getting the inflation.
This is critical. And of course, Rick Adana is going to go right where we want to go, which is Olivier Blanchard and Joe Stiglitz X number of years ago through the IMF begging for a 4% push. Charles Evans of Chicago begging with me at the Council on Foreign Relations X number of months ago for a push. Is there any evidence they can push inflation up other than Hong Kong-like helicopter money?
Well, there's been very little evidence in this cycle. So what the Fed needs to do is extend the cycle as much as possible.
Exactly. Move out the x-axis.
And drive the unemployment rate down as much as it can until you start to see those wage pressures. You don't get consumer inflation until consumers have wage inflation. Otherwise, they can't foot the bill, and so it never becomes a self-fulfilling cycle.
What is the mechanism or reaction functions, the factors that push the x-axis out to give the Fed and give America more time to get back to that inflation rate, which maybe shows animal spirit?
Well, first of all, I think the Fed needs to look back at the playbook over the last couple of years and realize that it started tightening policy too soon, and it tightened policy too aggressively. Now, they were very eager to get interest rates to a higher level, but in hindsight, they should acknowledge that the reaction function was flawed, and they should have had a more dovish approach, as dovish as it was, where we were getting one hike per year. Towards the end of Yellen's term, she did accelerate the pace of tightening, and then, of course, in Q4 of 2018, the Fed tried to push through that final rate hike when it was obvious that was not appropriate in the marketplace, and markets tanked during the course of the quarter, and the Fed had to ultimately reverse course.
I promise I'll get this chart out on LinkedIn today. It'll be my chart of the day, and it's on Germany and U.S. 10-year yields. And John Norman of J.P. Morgan looking at that x-axis out for all central banks, the lack of evidence that we can reflate an economy. Notice the Japanification of Europe, the idea of yields coming in. Is there a risk that America becomes Japanified even with the good efforts of our central bank?
Well, we have a very different demographic story than Japan. So first of all, just population dynamics in general are much more favorable for the U.S. They're not moving in the right direction, though. So we do have to make some very difficult decisions. We don't have enough new workers entering the economy. So either we need to boost the birth rate, which developed economies around the globe have tried to take measures to do that to very little success. Or if we can't grow the workers domestically, we need to import them, which means there has to be a very important, serious discussion about immigration policy.
We're going to go back here. We talked to, who's the lightweight from Princeton we talked to yesterday? Oh, Blinder. Let's talk to the heavyweight from Princeton right now, Rick Adana. Professor Blinder, what's he in his 47th edition of his textbook or something?
I think so.
The esteemed Professor Blinder nailed just what you said, which is, look, we're doing an inflation-adjusted analysis, and maybe we need to suggest back to a more nominal analysis, like the old days. Think Arthur Burns and, Burns' smoke rings have changed. We've got to do something. Okay, do we go back to a nominal analysis?
We need a central banker with a pipe.
We need a central banker with a pipe, no question about that. I said that to Chair Yellen once, and she threw me out of the room. Carl, seriously here, do we need to go back to a nominal analysis to get the animal spirit
in
back?
a world where there's no inflation? It doesn't matter if we look at the nominal or the real, frankly. And so the Fed does have to kind of reevaluate how they're approaching the situation. We need to get through this coronavirus shock, which is a supply shock, but also a demand shock. And so the Fed is not without ammunition to fire at this problem. And I suspect that Jay Powell left that G7 conference call yesterday frustrated at the lack of real tangible coordination, and so he decided we have to act on our own, and that was a big catalyst for what we saw yesterday morning.
Not that I want to put you on the spot, but hey, no one's listening. Are we going to see coordinated action or uncoordinated action? Do you expect the new guy at the Bank of England to do something, or Madame Lagarde to do something?
I think we will see uncoordinated action, unfortunately. It would be more powerful when central banks are running low or have exhausted conventional ammunition, that being interest rate policy. It would be more effective if we all went
So you're suggesting
together.
on that call yesterday, Powell suggested this with Mr. Mnuchin, and they said no.
I suspect that there was lots of pushback and people giving empty promises about fiscal policy and whatnot, and Powell realizing this is not going to happen. So we have to do what we can, which is part of the solution, not the entirety of the solution.
Alan from Princeton, New Jersey, emails in and says, "Give my regards to Carl Riccadonna with us, the head of Bloomberg Economics. Futures up 61 right now. The yield, oh my God, crisis over. 10-year yield 1.0053%. Wow, if things change."
Alan, thanks for listening.
Yeah, exactly. We thank Professor Blinder for appearing with us yesterday afternoon. Please stay with us worldwide. This is Bloomberg Surveillance. Good morning.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Money Minute. Futures point to a rebound at the open on Wall Street following last night's Super Tuesday primaries. Stocks tumbled about 3% yesterday after the Fed cut interest rates by 0.5% in an emergency bid to protect the economy from the coronavirus. Some investors doubt the rate cut can prop up U.S. growth. Health stocks and insurers may outperform the broader market today after Joe Biden's Democratic presidential campaign got some new life on Super Tuesday. Wall Street looks on a Biden candidacy more favorably than that of Bernie Sanders, who's campaigned on the promise of Medicare for all, which poses a threat to private insurers. General Electric is standing by its annual financial forecast despite a first-quarter blow from the coronavirus outbreak that has disrupted supply chains and hurt business activity worldwide. And U.S. private employers added 183,000 jobs last month. That was a pullback from the month before, but beat analyst estimates. The Labor Department's jobs report for February is due on Friday. Gina Cervetti, Bloomberg Radio.
Our relationship with Asia is simple. Find the most experienced journalists.
These countries will need each other more and more in the future.
Let them gather the best data and experts.
Let's get to Singapore now and our guest.
Then bring everything they find straight to you.
Let's talk about where you are. There's quite a lot of headwinds there too.
Actually, it's not simple. It's just better. Bloomberg Daybreak Asia, tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The Federal Reserve's independence is crucial.
Central banks should be prepared and not presumptuous.
Finance.
In order to grow, you need to innovate.
Global money doesn't like uncertainty.
Investment.
I think the issue in the market is really more about the possibility of a recession in the next couple of years.
I do think we need to get back to where we have always been, the American dream.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning. This is Bloomberg Surveillance with Tom Keene and Paul Sweeney. I am not Tom Keene. He is right next to me. Paul Sweeney is off today. We are looking at markets that are trying to grind higher ahead of today's open after yesterday's decline in the wake of a 50 basis point emergency rate cut.
I was just looking at a 2-year CD, and I think I'm going to get like 0.52% for it for the next 2 years.
So what, quintuple leveraged cash now?
Well,
just lever it up?
No, I was quintuple. I could do that, but it's a real thing. What I did is I hedged it. I set up I hedged cash.
Oh, dear Lord.
It didn't work out. It was something about the delta.
I do want to bring to you this headline just crossing that the European Union sees Italy and France at risk of recession from the virus impact. And this follows the headline in the news this morning that we were talking about earlier about how Italy is going to be closing down schools and universities in the wake of a spreading of the virus, but really bleeding into sentiment, bleeding into productivity and raising questions about that region.
Just had a great conversation with Carl Riccadonna about this with Bloomberg Economics and the idea of to use a phrase from Hilarion, the unknown unknowns of medicine. We're talking economics, we're talking finance, we're talking investment, but there's medicine to that. And one of the great things, Lisa, that I saw today as we begin another hour here, and of course, Lisa taking you through the rest of the morning with a lot of news flow. Without question, the best wall I saw today was in London at Queen Victoria Street, of all the different companies worldwide adjusting in real life. It's one of those beauty walls that Francine has behind her.
Yeah.
And it was all the different logos of all the different companies adapting. And that's a nice way to segue here to David Wilson. Do you start with the airlines again, or do you go a different tact here on the virus?
You got to go a different tact here. And it's not about the virus. It's about Super Tuesday, because you saw Joe Biden make a comeback. Of course, that came at the expense of Bernie Sanders, who's been pushing the Medicare for All program. So you're seeing healthcare stocks taking off in early trading. United Health Group, biggest health insurer, up 10.5%. Wow. That's going to help the Dow Jones Industrial Average because that stock is part of it. Cigna's up 9.5%. CVS Health, which is drugstores, pharmacy benefit management, and health insurance, up 5.5%. You look at the biggest drug makers. You got Pfizer up 2.5% and Merck up 3%. So those primary results on the Democratic side definitely giving a lift to healthcare stocks in early trading. Facebook's up 2%. People familiar with the matter said the social media company and its partners in cryptocurrency Libra are considering a redesign of the project. They said Libra may be turned into a payment network that accepts more than one digital coin. AT&T's up 1.5%. The phone company is buying back and retiring $4 billion of stock starting next quarter in an arrangement with Morgan Stanley. AT&T also raised its quarterly dividend by a penny a share to 52 cents and reaffirmed forecasts for this year. General Electric's up 1.5%. GE stuck with full-year forecasts, even though the coronavirus outbreak will hurt first-quarter results. The annual outlook doesn't incorporate any effect from the virus beyond this quarter, though, so we'll see what happens there. Lots of earnings reports to look at, and most of them not doing stocks any favors. Hewlett Packard Enterprise is down 3.5%. This is the business computing company. Their fiscal first quarter profit failed to beat analyst average estimates of Bloomberg survey for the first time in about 3 years. And HP Enterprise lowered a fiscal year cash flow forecast. Brown-Forman, Jack Daniel's whiskey, and a whole lot of other distilled spirits down 3%. They cut fiscal year forecasts for third quarter results with projections. In retail, you've got the off-price chain Ross stores down 2.5%. Their earnings forecast for the current fiscal year failed to meet estimates. The dollar store chain Dollar Tree down 2%. Sales for the fiscal fourth quarter were lower than projections. Also, their first quarter revenue estimate coming up short. And Nordstrom down 8.5%. The department store owners' profit and revenue last quarter missed estimates, and their earnings forecast for this fiscal year.
I was going to say they're looking forward, and it's not happening.
No, it's not. There is one plus though coming out of earnings. Campbell's Soup up 5.5%. The food maker beat fiscal second quarter earnings estimates and raised its annual profit forecast. But since you mentioned airlines, we should note that they are higher in early trading. American's up 3%. Delta's up 3%. United up 2.5%. And by the way, American United both down for 8 days in a row. So this would be a reversal.
We call that
if
a bounce.
Indeed they sustained their pre-opening gains.
David Wilson, thank you so much. The futures up 53. The yield just under 1%. 10-year yield 0.9908%. Lisa?
Yeah, and as the coronavirus spreads, there's a real question of how employees will work, how employers will respond, and with respect to sick leave, what the rules are, whether they have to comply with them. And we're very glad to say that we have with us Bloomberg Law reporter Genevieve Douglas joining us from Washington, D.C. And Genevieve, this is a real question right now, especially as President Trump and his administration consider paying doctors and hospitals to cater to uninsured patients. What's the sick leave law looking like? How much do employers have to cover any expenses of employees who call out sick because they think they might have the coronavirus or they actually do?
Certainly. So there's a patchwork of sorts when it comes to laws that employers will have to consider when deciding how employees can take leave, whether that's paid leave. There's no federal paid sick leave law. We have the Family and Medical Leave Act, which would be for employers with 50 or more workers, and that would cover a serious medical illness or a serious health condition. And there's some kind of debate about whether the coronavirus would qualify because it is a novel virus. And I think if someone is ill, if they've tested positive and they're in the hospital or receiving inpatient care or medical care, that would certainly fall under the FMLA qualifications. However, for quarantines, we're kind of in uncharted territory. When it comes to state-by-state laws, only 10 states have mandates that employers provide their workers with paid sick leave. There's about 20 or so additional cities, states, municipalities that also have similar laws. But those laws can vary by how much leave they have, and often it's only a week. So when we're looking at a quarantine for 2 weeks, we're kind of questioning how much time is enough.
What's the power? Take a state. I'm not going to mention names because I get a lot of hate mail as we're listening to it in all 50 states. Take a state that's way behind on this, or they feel, this is the way it's going to be for whatever the philosophy is or that. Are they going to force somebody to come to work who is diagnosed with this virus? Can they do that?
I think once there's a diagnosis, it is out of employers' hands, right? Because then you have public health officials involved. You've got, a hospital that has a patient that tests positive for coronavirus isn't necessarily going to just release them into the general population.
Lisa shows up 200 business days of the year. A slacker like me, I get a runny nose, I take the day off. So I'm sitting at home in one of these states. I don't feel that good or whatever. The Red Sox lost. And, I decide I don't want to go to work. People are going to be like that, right?
Sure. I think there's a possibility. I think especially when workers in hourly or lower wage jobs are having to choose because they're the least likely to have access to paid sick leaves. And I think that, when they're having to choose between taking unpaid time off and going to work, there might be some fear that workers will choose their paycheck because it has real life consequences if they can't pay their rent or their bills. That being said, I feel like a lot of employers in this particular case are going to be lenient, right? Yeah. So I think employers want to make the right decision. I think that that's true for a number of reasons. Not, when it's a public health concern, certainly, and you don't want to be the company that that isn't being empathetic or compassionate for workers who are ill.
Just to paint a picture, Tom Keene right now is stroking the disinfecting wipes as he stands here.
It says kills 99.9% of viruses. So on a type 2 basis, what about the 0.1% of the viruses?
I will also pro tip, maybe don't stroke the sides of it when people pick it up to disinfect things. It probably isn't clean on the outside.
There could be a surface that might have a few germs on it.
Escherichia coli, salmonella, strep, and also Genesee cream ale. That's amazing.
Genevieve, just real quick here. One big question has been whether businesses will take a serious hit to their bottom line as a result of the coronavirus. And I have to wonder whether there's any assistance either from insurance or the government to help them cover all of the lost productivity, the sick days that people might be calling in.
I think it's a serious concern. I'll be honest, it's not something that anyone I think has been able to calculate, but I certainly think that when it comes to these types of outbreaks and potential pandemics, there seems to be a willingness to be flexible. Now, that being said, who's to say what's going to come in the future?
What about our agricultural complex, and particularly the food processing of our agriculture? Do they have a separate body of law? Or are they going to be under the same scrutiny as, pharmacies or, retail stores?
The agricultural industry and the food processing industry, I do think that so for example, the firefighters in Washington who were exposed to COVID-19 out in Kirkland, there was some OSHA, occupational safety and health regulation that kind of took over the quarantining and treatment of those workers. So, there are certainly some industry specific laws. I can't speak directly to agriculture and food processing, but I do think that the thing that makes this so complicated is that there is kind of a layering of rules and regulations from multiple agencies that, depending on what you do for a living and who you work for and how you work, employers are going to have to really know what they need to do. It's going to be it's tough. And it's ever changing. That's the thing. When we wrote this story earlier this week, only 10 states, and now we have 12. So.
Okay, Genevieve, this is very valuable. Genevieve Douglas, thank you so much, writing for Bloomberg Law and Bloomberg BNA. Greatly appreciate that this morning. Futures up 61 with the news in New York City. Here's Michael Barr.
Tom, Lisa, thank you very much. With the smoke starting to clear on the races of Super Tuesday, the race has reshaped into a two-person matchup between Joe Biden and Bernie Sanders. Elizabeth Warren finished third in her home state of Massachusetts and is behind more than 400 delegates from Biden. Warren, ahead of next week's Michigan primary, spoke last night in Detroit.
Americans are at our best. When we see big problems, we call them out and we fight back.
Biden won 9 states, including Texas. Sanders won the big delegate-rich state of California. He spoke to his supporters in Essex Junction, Vermont, with an apparent reference to Biden.
One of us has spent his entire life fighting against cuts in Social Security, wanting to expand Social Security. Another candidate has been on the floor of the Senate calling for cuts to Social Security, Medicare, Medicaid, and Veterans programs.
A steep drop in business trips is dealing a gut punch to a travel industry already reeling from the coronavirus outbreak. Amazon has told its nearly 800,000 workers to postpone any non-essential travel. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Lisa.
Michael Barr, thank you so much. Right now we are seeing a lift to the screen. S&P futures up 61 now to 30.59. NASDAQ up 178 to 87.60. Looking at a yield curve steepening, 30-year selling off just a touch with yields rising. 2-year still coming in now 0.6709% if we're going to do 4 digits, as Tom Keene says we should. This is Bloomberg.
Imagine being denied an apartment because of your religion or your race or because you have children or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Influential conversations from Bloomberg Television. Here's Paul Allen.
Now, despite President Trump's claims that his administration is ready for the coronavirus in the U.S., there is mounting concern that the government is grossly underprepared. So let's take a look at the situation now with Dr. Caitlin Rivers. She's professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health. So, Dr. Rivers, thanks for joining us. What is your assessment of U.S. preparedness for this?
I'm pleased that diagnostic capacity in the United States has expanded this week and will continue to expand in the coming days. I do think that will mean
a change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £21.95 a month. Join the Great British Broadband switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Publicly available out of contract, non-promotional pricing. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. See vodafone.co.uk/broadband.
We can't always tell, but 1 in 5 people in the UK are disabled. So when we're all heads down, stampeding and charging because we're late for the bus or train, we could be doing more harm than we think. So let's not forget about the people we share our journeys with. Let's slow down a bit. Remember, it's everyone's journey.
Hello, you lot. It's Sean from Tyneside News. It's been proper electric in my shop today because tonight it's a quadruple rollover. So I've cranked up the tunes.
Loggy dip, please, Shawnee.
You don't want to miss it, like.
Lotto from the National Lottery. Your numbers make amazing happen. Rules and procedures apply. Players must be 16 or over.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres. Ends 18th of March.
Very good. Karen. Thank you so much. And thank you for the data checks, the complete data checks that Karen Moscow is known for worldwide. I'll do a partial data check. I sound like George Carlin in a bad moment with a yield 0.9924. I guess it's a higher yield than the gloom of yesterday, but
sub 1%. I think that's
0.9924. I'm not used to it.
The idea here is yields lower, period, the end, and that's what people see. And the big question is, you were raising earlier today, are we seeing the Japanification of the developed markets broadly?
Jared Bernstein with us right now, and if you're curious about Vice President Biden's path forward on economics and policy, There's no one better to speak to. He's Senior Fellow, Center in Budget and Policy Administration, Prime Policy Priorities, former Chief Economist, of course, with the Vice President. Jared, did you speak to the Vice President last night or in the recent days, and how's he doing?
I haven't. He's been a little busy. I've talked to folks on the campaign, and I thought what was interesting to me is that these folks were feeling strong even before South Carolina. They believed that South Carolina was going to turn the tides, and thus far events have proven them correct.
Define establishment Democratic Party economics and how it can defeat the President of the United States. There has to be a strategy. My guess is after 4 years ago, it'll be more overt. What will that strategy be to defeat Donald Trump?
So that's a two-part question. Let me start with the first part, which is easier, about the economics. I think the way to think about the economics in this case is building on what exists versus introducing a lot of new things. So if you listen to Biden's agenda, he's talking about building on the Affordable Care Act, planning a path towards universal coverage, but not trying to leapfrog there quickly. If you look at his progressive tax ideas, they're building on the code as it exists. How does that beat Donald Trump? Well, it's a return to a more established, normal set of procedures, and it's a belief that what the country craves is a lot less chaos and a lot more order from someone who's had a lot of experience in government.
One thing that marked the primaries was the lack of younger voters turning out. And this was a reason, perhaps, that some people are pointing to Sanders not performing as well as he was expected to. And I'm just wondering, if you take this forward and you take this idea that we're probably going to see Bernie Sanders still very much in the race, how significant is it to you that we've got a two-candidate race at this point where one of them ignites the younger voters, which is the key demographic, and it's not Joe Biden? What does it say about Joe Biden's chances?
I think what it says is all a function of something nobody knows the answer to, which is that if Joe Biden ends up being the nominee, and you make a great point, this ain't done yet, will those voters switch over, or will they sit on their hands as kind of a protest vote? I think the anxiety about Trump having 4 more years is enough to keep people from sitting on their hands in that context. But that is the big question.
There's another question, too, which is that Bernie Sanders also still has quite a bit of support and quite a few votes. How likely is it that we're heading toward a brokered convention, a sort of worst-case scenario for Democrats trying to give voters conviction that they actually had a choice in who ended up being the candidate?
You know, it's a fair question. I got to say, I'm an economist, and I don't know that I have a great answer for you. I will say this. One thing that really struck me about last night's vote is that late deciders broke towards Biden. It happened even in Massachusetts, a state he didn't campaign a lot, where he beat Senator Warren. So that leads me to believe that there is an electability case to be made there. People are just thinking that he's the one who can most reliably beat Trump, and I think that probably does put some wind in his sails.
George, you're not doing market economics where you're gaming 0.1% on real GDP, et cetera. But how do you envision the economy going into it? It's, folks, the GDP statistics come out. I don't have it in front of me, Joe, Jared, but I'm going to suggest we're going to get a GDP report 3 days before the election, whatever. But are we going to have a 2% economy, or could it be gloomier to the benefit of a Democratic candidate?
Certainly the coronavirus is a huge concern. I saw an exit poll this morning that I must admit surprised me, which is that the coronavirus impact was high on the minds of lots of voters. And by the way, that tended to break towards Biden. So it is definitely likely, I would say, that the economy will be growing considerably slower, well below trend, by the time when people are making up their votes. And by the way, if we don't have to have a recession for unemployment to start to rise. If growth is cut by half, which is the Goldman Sachs forecast, the unemployment rate could be closer to 4%. And that's still low, but it's a half point above where we are.
And we'll be watching claims tomorrow on that. Jared Bernstein, thank you so much. Greatly appreciate your time. Looking forward to seeing you in Washington again. Of course, Dr. Bernstein with the Vice President a number of years ago with the Obama administration, and now it's CBPP. I should point out, folks, Center on Budget and Policy Priorities is the group that everybody reads, even people that disagree with them. They're more of a liberal, democratic, centrist kind of thing, and even even diehard Republicans read that organization stuff. It's just so smart the way they lay it out. Lisa, what do we see on the screen? I mean, I'm seeing a churn here, and am I right that it's essentially waiting for news?
Yeah, people are trying to understand how to game out the effects of the coronavirus. Certainly, the Italy announcement was not great that they're closing down schools and universities, but we saw a pretty big bounce back. The moves are muted. Let's just put it this way. The moves are not that significant. Right. We did, though, get the European Union warning that Italy and France could fall into a contraction as a result of this.
Italy malls closing theaters, cinemas nationwide. This is a draft decree. Italy to advise elderly people to stay indoors. That would be me. Italy considers banning all public events. Italy may allow only closed-door sports events, which I just assume is to empty state. I mean, those are extraordinary headlines from any nation.
Yeah, and the question is, when will other nations follow? Yeah. Meanwhile, over in the U.S., after the 50 basis point rate cut from the Federal Reserve yesterday, you're seeing 3 additional rate cuts being fully priced in by year-end, 1.25 percentage point decline in interest rates being priced in. Year 2020.
Well, we will see. Swiss franc here today. Some strong Swiss franc action there, actually, on Euro Swissy as well. We're up 62, green on the screen. Dow futures up 611 points. A VIX 32.55. Stay with us. This is Bloomberg.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Stock futures point to a rebound at the open just ahead of the bell after the presidential primaries and after a big tumble yesterday on Wall Street. Joe Biden's surprise comeback in the Super Tuesday race for the Democratic Party nominee took the lead from Bernie Sanders that had unsettled some investors. Right now, Dow futures up more than 500 points and crude oil is climbing up about 1.5%, almost back to $48 a barrel. Yesterday on Wall Street, the Dow tumbled almost 800 points. The Fed cut interest rates by 0.5% in an emergency bid to protect the economy from the coronavirus, but that failed to ease investor concerns. China's car sales sustained their biggest monthly plunge on record, down 80% in February as the coronavirus kept shoppers away. The outbreak has paralyzed the industry just as it was looking to gradually stop a decline that's lasted 2 years, with manufacturers now left to wonder when sales might recover. Gina Cervetti, Bloomberg Radio.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers. Why all the top-tier experts? Because business is not a magic trick.
Give us a sense of the economic backdrop.
Bloomberg Markets.
Which financial records are these?
Weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow along with Tom Keene and Lisa Abramowitz. And the opening bell is brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS. And stocks are higher at the open. The S&P up 1.8%, up 53 points at 3057. The Dow Jones Industrial average up 2.4% or 632 points at 26,542. And the Nasdaq's up 1.7%. Or 150 at 88.33. 10-year Treasury up 5/30 seconds. The yield 0.98%. The yield on the 2-year 0.64%. NYMEX crude oil is up 2.5%, up $1.20 to 48.38 a barrel. COMEX gold down 0.2% or $2.90 at 16.41.30 an ounce. The euro 1.1107 against the dollar. The yen is at 107.42. Tom and Lisa.
Thanks so much, Karen. Even when it's this busy, this crazy out, it's always interesting when you see a research note come out that just stops you cold. George Saravelis at Deutsche Bank has just put out a bombshell report on the Swiss National Bank. For American listeners, this is a little inside baseball, but basically is saying their balance sheet is a disaster. It completely impinges the economy. And Lisa, he's looking for two things. One is for stronger Swiss franc, back to where it was in the crisis of 2015. This is weaker euro, stronger Swiss, a huge move by the end of the year to 1.00. But far more, he thinks they're going to take their disastrous too large balance sheet and bolt it off and make a sovereign wealth fund.
That actually,
like a Singapore thing.
That actually is very interesting, considering the fact, how much of Apple do they own?
A ton. I don't have that in front of me, but the answer is more than Tim Cook. Anyways, there we are. We'll get Mr. Saravelis on to expand out on this. Mr. Bailey, the Bank of England's Bailey, headline sees need for action with government on supply financing.
Yeah.
Again, maybe the percolation of people starting to do something, as Chairman Powell did something yesterday.
Yeah, and people are eyeing the Bank of Canada. People are eyeing also the UK, and you're seeing yields there fall to record lows. But really the question is, from the fiscal standpoint, what kind of leadership are we going to get, and what kind of programs are we going to see?
One of our rules here in Surveillance Roulette is we're not going to our guests until we're up 1,000 points. So we wait.
We're just going to sit here in silence.
Up 700 points right now, 700, 26,618 on the Dow, SPX 3,068, nice elevation there. Yields to review, a little higher yields than what we saw yesterday, but it's a nuanced curve. The 2-year yield at 0.65 is actually lower. The 10-year pivots right now at 0.9843, just under the 1% level, and the 30-year bond was actually higher in yield earlier, so it's a nuanced yield curve. To give us perspective and to synthesize in not the gaming of Fed policy and all that, but just the macroeconomics of the moment, with Medley, Benjamin Evans joins us as well. Ben, you are notorious for writing these not lengthy but dense essays where we go, damn, I've got to read this. What did you write after 50 basis points yesterday?
Well, Tom, I was looking really at the response in the market, and really to your earlier comments on your show this morning, when you were talking about real interest rates, right? I think that's where the most important move was, right? The real interest rate yesterday saw a huge drop, and I think this is really related to having accommodative policy really coming into financial markets. I think that's what you're seeing today, right? And real interest rates drive that combination.
So how do we view this? Do we view this as a complete repricing of where the economy should be growing at? Do we view this as the Fed trying to lubricate the financial system at a time when it could potentially see some hiccups? How are you sort of translating the move that the Fed made, which was extraordinary? I mean, we can't emphasize enough.
Yeah, no, definitely. And, the other day someone told me, like, hey, Ben, what do you think of this as a veteran of the markets? And it dawned on me, like, since 1995, I'm in financial markets, 25 years. I'm not even 50 years old, but I have seen these situations before. Old. So 9/11 was, to me, really like similar kind of situation of like, it's exogenous, there's a lot of uncertainty, but 9/11 is more severe than the virus that we're dealing with now, right, in terms of public confidence. So I think, you have to put it in the context of confidence, right? It is really important to have markets, stabilized, so to speak, in order to buy that time to deal with, what we're going to see in public confidence. We're in retrenchment, right? Because all these companies are announcing all these measures and it's going to disrupt the economy. At the same time, as you mentioned, another part is the G7 context of this. Yeah, if we're getting funding disruptions, if we're getting like liquidity issues in multiple markets, it's all integrated, right? So that is something we cannot let that happen again. We learned a lesson from 2008. I think that's the central bank G7, let's say quasi-coordination on that front. And ultimately, all central banks will go by themselves, right? Whatever the Fed did, or whatever the ECB does, or Bank of Canada today, or RBA the other day, that's kind of domestically geared policy. When it comes to the liquidity in markets, that's, I think, a focus for all central banks. And I think, to your other colleague, Damien Cesar, was talking about this too today, the funding pressure, you see that a little bit in markets, like you think about cross-currency based swaps, kind of technical, but it's not that significant, I think. So it looks to me not as severe at this moment than the past crises I've been through.
So looking forward, do you buy the dip? Do you start going into risk?
Well, I have three ideas here that I wanted to highlight. So, from past situations, when you think of this kind of a crisis, when the government gets involved too, we're kind of careful shaking each other's hands because of the virus. I would say you want to shake the hands with the government, right? Because the government is going to, address the systemic companies in the economy.
Because they've got better health care, so they're not going to be as sick?
For example, but it's also, the travel or any kind of other systemic industries to the economy. If there's that disruption, there's government support, and that's sort of trickling through now across the globe, right? So there's this idea, you shake hands with the government, you're going to look at those sectors that have been really beaten down and get some government support. The second part is that you have a relative value developing now between the different markets, where you see returns significantly dispersed, I would call it. In other words, one market is much better than the other. So that's an opportunity, particularly in global markets. And then lastly, to your point earlier today, Tom, on your show, people looking at the hedge, right? What's the appropriate hedge? Because it's just too uncertain. And, your triple levered cash fund is probably standing out now. That probably
got that right. It's huge. I mean, I'm loving it. Ben, I look at all this, and I just want to go to first principles. And this is a guy that used to work with. His name is Gross. He was at PIMCO running a small shop. And, I'm sorry, Bill Gross would talk about financial repression. If you enjoyed your financial repression at 3%, you're going to love it under 1%. What do you suggest, economist, that retirees do here? Don't tell me they're supposed to buy Tesla. That's not going to work.
No, I totally agree with that, Tom. And, the financial repression, we're even deeper into it. Like, the 10-year yield at 1% after these two shocks, trade war and virus. You look at the previous zero-bound period of 08 to 15, the 10-year yield still averaged about 2.5%. That average is shifted down now through these, trade war and virus to maybe 1.5%. So the income aspect for the retirees is dramatically diminished. And it does require in that, I guess, it either would be somewhat more you own your own home and sort of tangible assets, right, for retirees. On the other hand, it's going to be a very conservative strategy in the equity space. If you really wanted to have income, it's going to be really challenging, I think, going forward, income.
So given the fact that income is non-existent or increasingly so in government bond markets, is that an argument still for equities, or does it speak to a lower growth backdrop that really does not justify where the earnings estimate Feds are right now?
I think the latter, Lisa. I think, again, interest rates are an interesting dynamic there. Every crisis, we end up in a lower point than when we started. And the normalization of those interest rates when we get a recovery, which we will have some of this, it's going to be moderate. So, yes, we're dealing with an exceptionally low interest rate going forward, which indicates that this last shock in interest rates really is an effect on, I think, long-term productivity, long-term trend growth. That's going to shift down. Maybe, too, our friend, colleague in the comment on Rich Clarida, right, who talked about the new neutral with Bill.
Did you talk to the vice chairman yesterday?
I did not. No, sorry. But, he came up with this idea of new neutral, right, when he was still at PIMCO and with Bill. And, that new neutral of 2% nominal, 0% real, that's changed now.
Okay, we're gonna go all geek on you, Lisa. I'm sorry here. If you take the vice chairman's research with Gertler and others, and you set up a geometry of a DSG structure, there's huge variability within that original algebra. A huge variability in the Euclidean space of that. That variability is crushed when you're down at these interest rate levels, isn't it?
Yeah,
by definition, there's no squishiness or malleability to smart models like that.
No, it isn't. I think there's another implication, right? Like, the exceptional low interest rate, if you think about, we are actually in Japanese interest rates, you said earlier on, before I came in, that makes it complicated to model. Nevertheless, I do think if you think about interest rates, our view also on this is like there will be some level of normalization as the recovery happens, right? Like that will be. It's just going to be, instead of having 3.25 in 2018, it's probably more like 2.25.
I haven't even thought about this yet. Very quickly, Lisa, what do the dots do?
The dots. Does anyone care what the dots are at this point? I mean, honestly, forward
Did we care when they first came out?
I mean, people used to care enough to have cupcakes with dots on them when the Fed dot plot would come out. Seriously, not anymore. I mean, forward guidance
This is you and
has gone
Sweeney
out the window.
living large. I talked to Redo, and he said we couldn't have cupcakes with dots on it on surveillance.
Ben Emmons, thank you so much for being with us. We really appreciate it.
You really had sparkles on your cupcakes?
I didn't have sparkles. I was not the driver of this, but there was a team that would have dot-themed cupcakes on.
You're driving the yield lower with this discussion
of dots. That's not exactly what I was going to say. The 2-year yields are at session lows here, 0.635%. And we are seeing equities continue to rally right now with the news. Michael Barr. Michael.
Thank you very much, Lisa. Thank you, Tom. Suddenly, a Democratic Party presidential field that once featured more than 24 candidates has transformed into a two-man contest. Former Vice President Joe Biden scored sweeping victories in 9 states, including Texas and Massachusetts on Super Tuesday, revitalizing his presidential bid.
And we're told, well, when you got to Super Tuesday, it'd be over. Well, it may be over for the other guy. Tell that to the folks in Virginia, North Carolina, Alabama, Tennessee, Oklahoma, Arkansas, Minnesota.
Rival Bernie Sanders seized the biggest prize with a win in California. Meanwhile, Massachusetts Senator Elizabeth Warren had a disappointing night. She didn't win a state and had a poor showing in her home state. Democratic Congressman James Clyburn, who endorsed Biden, shared a suggestion for Warren.
Senator Elizabeth Warren, I think that after finishing, looked like she finished third in Massachusetts, I would reassess if I were her as well.
Italy appears headed for a nationwide closure of schools and universities today amid a push to curb the spread of the coronavirus epidemic. Education Minister Lucia Azzolina says, we have asked for an opinion from the scientific committee on whether schools should be left open or closed. The decision will be taken in the next few hours. Earlier, media outlets reported that the school shutdown would start tomorrow and last until mid-March. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Tom.
Michael Barr, thanks so much. Michael, you're using the Perel there. We got it all over the house, the hand cleaner stuff.
No, I just use soap.
I come in last night, Vet Bill's got it next to his bed in the dining room. You can't pick up the dog now without doing a Perel thing. I said, what is that? The youngest got it for the dog to be sure the dog was safe here. We try to make some lightness here. It's some tough news on the virus this morning. Stay safe out there, as a TV show used to say from a few years ago. The Dow up 512 points. Stay with us. Karen Moscow with more data checks. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. It's not just coronavirus that's causing economic disruption right now. So is the climate. For the first time in the history of German winemaking, the country's fabled vineyards will produce no ice wine. To make the pricey golden nectar, grapes must be harvested when frozen on the vine. And this year, none of the country's wine regions saw the required 19 degrees Fahrenheit low. If that news makes you weep for your after-dinner drink, imagine how college basketball fans are feeling. The head of the National College Players Association says the NCAA may need to play March Madness with no fans to protect college athletes from coronavirus. Finally, Los Angeles Clippers owner Steve Ballmer is in advanced talks with Madison Square Garden to turn the Forum in Inglewood, California, into the team's new home. The sale would end a dispute between the billionaire and MSG's Dolan family about the construction of a new arena nearby. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Mayday, Mayday, this is Red Dwarf. Our engines are dead and we're being sucked into a black hole. Can anyone hear me? Over?
The only thing that's over is us, Crichton. We're finished.
Guys, relax. I've got Smart Breakdown with the AA. It sends them your vehicle's fault data, so they should know what's wrong before they even get here.
I don't believe it.
What, that they'll already know what's wrong?
No, that you're actually capable of something useful.
The future of breakdown today. The AA. Drive smart. See theaa.com for details.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge. With money back as actual cash, up to £10 if you lose on the first race of the festival. Sky Bet. That's betting better. Applies to first bet on first race at Cheltenham on losing singles and win part of each way singles only. Money back as cash, free bet stakes excluded, eligibility restrictions, T's and C's apply. 18 plus, begambleaware.org.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stocks rebounding as investors digest a surprise from the U.S. presidential primary and weigh the potential for more of a concerted effort by the world's largest economies to tackle the fallout from the coronavirus. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 up 1.7% at 49 points to 3053. Dow Jones Industrial average up 2.1% or 539 points at 26,458. And the Nasdaq's up 1.4% or 123 points to 8806.
107. 10-year Treasury up 9/32. The yield 0.96%. The yield on the 2-year 0.63%. NYMEX crude oil up 2.25%, up $1.07 to $48.24 a barrel. And COMEX gold is down 0.1%, down $2.30 at $16.42.10 an ounce. The euro at 1.1105 against the dollar. The yen is at 107.31. Stocks may be rising, but for economist Dennis Gartman, it is still risk off.
The trend is now down in share prices, and I think stock prices will head lower, not higher, over the course of the next several weeks.
And Gartman is urging investors to buy gold and bonds. He spoke earlier on Bloomberg Surveillance. A survey of private payroll shows U.S. companies added more workers than forecast in February, suggesting the job market was in good shape just as the coronavirus began rippling through the economy. And General Electric is standing by its annual financial forecast despite a first quarter blow from the coronavirus outbreak. GE shares up 0.4%. And that's a Bloomberg Business Flash. Tom.
Karen, thank you so much. Again, up 500 points in the Dow, 26,430 to be exact. And we're looking at the yield structure. Extraordinary. The path here off the shock of yesterday was higher yields briefly, then way lower yields down to that moment of a 10-year yield under 1%. And then this morning, lower yields, then higher yields over 1% on the 10-year. And in the last hour, we've come in 0.9634, and some of that off Mr. Bailey's comments. He will become the governor of the Bank of England March 16th as well. Right now, comments in a well-timed discussion with David Rubenstein. You know him, of course, from Carlisle. Some of you will know him from some of his public service, particularly with the administration of President Carter. This was a few years ago. And now he's become a TV star with piercing interviews with an eclectic group of world thought leaders and decision makers. And I always bring up, of course, his, I thought, definitive interview with Mr. Bezos. It will be tonight, 9 o'clock on Bloomberg Television. I want to begin first with Mr. Rubenstein talking to his good guest, the governor of Saudi Arabia's sovereign wealth fund. Let's listen in.
Now, you have said, I think publicly, you would like it to be the largest sovereign wealth fund in the world at some point, and you'd like it to get to $1 trillion.
$2 trillion.
$2 trillion.
Yes.
So when do you think you'll be able to get to $2 trillion?
The number looks really big because, you know, the largest sovereign wealth fund today is about $1 trillion. We think that it's very much achievable by 2030.
All those different things require a big staff to manage. How big is the PIF staff today?
When we started, it was 40 people. Today, we're more than 700. By year end, our target is to have more than 1,000 full-time employees in PIF.
This deserves at least a 1-hour conversation. It could be one of those panels where I would discuss this with Mr. Rubenstein. Instead, we've got too few minutes to talk about this. David, there's any number of ways to go here with this effort by Saudi Arabia. What makes this effort of a sovereign wealth fund different from so many others we're aware of?
Well, this sovereign wealth fund came out of the blue in many respects. Some of the well-known sovereign wealth funds, like the Kuwait Investment Authority, the Abu Dhabi Investment Authority, the government of Singapore Investment Company, they have been around for decades, generations in some cases. The sovereign wealth fund in Saudi Arabia is relatively new. While the head of it, Mr. Al Romanian, has been the head just for a couple of years. It actually was started, PIF Fund, in 71, but it was relatively modest. Under his leadership, it's now becoming, as he hopes, one of the biggest in the world. He was a commercial banker in Saudi Arabia. He's a native of Saudi Arabia, and he was picked by MBS to lead the PIF Fund, and he's built it up into a very, very considerable force. Obviously, the IPO of Saudi Aramco has given it more resources, and I should say he was also appointed to be the chairman of Saudi Aramco, in addition to the job he now has as being the head of PIF. So he's got two big jobs in Saudi Arabia now.
Is the sovereign wealth fund a bolt-on to the House of Faisal? Is it a bolt-on to the royal family? Or can it be discrete and also separate from the social debates of the kingdom?
Well, they've hired a lot of investment professionals from the West, so they have a lot of people as well from Saudi Arabia. It's designed to get the highest rate of return that you can legally do without taking undue risk, but it also has a different mission. They also want to have people come into Saudi Arabia and invest there. So they might invest with people who will invest in the kingdom, as well as people who will invest and get good rates of return outside. So it's got a dual mission in that sense.
Just because of time, David Rubenstein, give us one vignette of this important conversation. What was something that surprised you from the governor?
I think it's surprising that he doesn't seem to be under undue stress. I mean, if in my case, I was running as the chairman of the Saudi Aramco and also running the PIF, and MBS is deeply involved in both of them, you'd think he would have been under more stress, but he seems to be relatively relaxed about what he's doing, and I think a very engaging person. He's come to be well known in the investment world in recent years. In fact, we did this interview at a large private equity conference, and he attends private equity conferences. He's involved in a lot of investments directly. He's on the board of Uber, where the fund made a direct investment before they went into the Vision Fund, and he is the person who, with MBS, made the decision to go into the Vision Fund, the first one where they committed $45 billion to it.
David Rubenstein, one final question. You were brought up in a regime of 6, 7, and 8% rates. I don't want to, give away Mr. Rubenstein's young age, but this was a few years ago. How does your world spin with a 10-year yield of 0.9522%?
It's hard to believe because you're referring to the days when I was in the Carter administration where interest rates were much, much higher. It's hard to believe that the Treasury is now below 1.0, but that's the world we live in, and I suspect it could go lower because I'm not sure we've seen the last of the interest rates declines from the Federal Reserve.
David, thank you so much. David Rubenstein, peer-to-peer conversations with a gentleman from the Carlyle Group. This is an extremely important interview, particularly for our global audience. Saudi Arabia's public investment funds, Yasser Al Rumayya and their governor. Look for that tonight, 9 p.m. on Bloomberg Television. Of course, so much of this wrapped around the new economy we're dealing with. That yield has come in very sharply here from 1%, even 1.01% to 0.9506. We'll have to watch yields with a 2-year yield in 9 basis points right now, 0.6138. I've got to get up the fancy terminal. My terminal, I've got to put a couple more quarters in it here, I think, just to get through the rest of the hour. You have to feed the beast, as they say. The 2-year yield right now going down to new lows. Yes, I want to say the 2-year yield now down to new lows, 0.6138%. That is remarkable. The Dow up 400 points. Stay with us through the day. Don't forget Jim Bullard at the 11 o'clock hour. This is Bloomberg. Good morning.
Look at them.
Asset management.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
I'll read Stan. Will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Despite never having used them, Alison Peartree was not initially a fan of purple bricks.
Because I heard from my uncle's cousin's neighbour's dog walker they don't have proper estate agents.
But Alison's uncle's cousin's neighbour's dog walker was wrong. Purple bricks have experienced local agents ready to sell your home.
Turns out Martin from Purple Bricks was very knowledgeable and he didn't charge commission. I've even recommended him to my sister's boyfriend's auntie's hairdresser, Sharon.
Purple Bricks. Book your free valuation today.
Fixed fee payable on instruction or after 10 months. Viewing service cost extra.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge, with money back as actual cash up to £10 if you lose on the first race of the festival. Sky Bet, that's betting better. Applies to first bet on first race at Cheltenham on losing singles and win part of each way singles only. Money back as cash, free bet stakes excluded, eligibility restrictions, T's and C's apply. 18 plus, begambleaware.org.
Do you do the same thing every weekend? You know, meet up with the same friends for brunch, browse around the same shops, eat the same Saturday night takeaway. Mine's a lamb balti with mushroom pilau rice. Snuggle up next to the same person and watch the same brain-numbing reality TV. Then maybe it's time to switch it up. Starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
The moment you realise that radiator isn't warming up, it's freezing and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Tune-in's your destination for college basketball, and it's free.
Down the right side of the lane, jumper up.
This week, we have a must-hear game. North Carolina at Duke.
2 for the win! No, tapped up by more! And it is the Blazers! More bakes it in!
This Saturday, tip-off is at 6 p.m. Eastern.
Kimball right of the lane against the SU zone to Warren.
With college basketball and tune-in, you can hear every call from games around the country live. Search college sports to listen free today.
Financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Where's your views on the municipal bond landscape?
The market does not like uncertainty, does not react well to uncertainty.
There's a whole lot of optimism around the valuation of Uber.
What is Ford saying about the self-driving car?
Breaking market news and insight from Bloomberg experts.
Maybe we're getting hooked on debt and low interest rates.
The black hole called power could be a bigger black hole.
Only buy IPO stock that you can't get. If you can get it, it's probably a dog you don't want it.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning, Lisa Abramowitz, Paul Sweeney. Paul Sweeney off today. Right now, we are looking at a rally, although off earlier highs. Coming up on this program, we're going to be hearing from St. Louis Fed President Jim Bullard, who's going to be sitting down with Kathleen Hayes of Bloomberg to talk about what the Fed is looking at for further rate cuts. Plus, we'll take a look at what happened yesterday with Super Tuesday. But right now, let's go get some numbers. Greg Jarrett with a Bloomberg Business Flash. Greg.
Well, we're off earlier highs, Lisa, but stocks are still higher. Investors are digesting the surprise in Super Tuesday. They weighed the potential for more concerted effort by the world's largest economies to tackle the fallout from coronavirus, and the dollar has advanced. Jim Caron, Morgan Stanley Investment Management Fixed Income Portfolio Manager, tells Bloomberg yields are not coming back anytime soon.
The thing is that we have to accept that lower rates are probably going to be here to stay for a while until we get through this virus, and then some. So the reality is that when we think about returns, when we think about risk, look, we have models for this, right? We can look at Japan, we can look at Germany. The one thing that I say, though, is just be very, very careful. When these interest rates and these coupons get very, very low, the duration gets very, very long, which means that the bond market can become a lot more volatile.
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P is up 1.5%, up 44. Dow's up 1%.